Keeping that intact is going to be very important. I think education is also very important. Having investors, having retail traders understand that when they are trading in off primary hours, that the volatility is going to be significant. I think the education process is going to be as important.
What's the soonest date this could happen? I mean, first half of the year, second half?
Yeah, the wheels are already in motion. Things are moving. It's continued to be a high topic conversation at the SEC. I wouldn't be surprised if we don't see something by the middle of next year.
Okay, bullish, bearish, cautiously optimistic.
I'm cautiously optimistic.
Okay, Jonathan Corpina, thank you so much. I had to get at least a market thought there. Jonathan Corpina, Meridian Equity Partners. I think that's a really important topic, and it's one that we've talked about for a long time, and now it's really coming to fruition into the forefront, and that could be a story really for 2026. So I'm glad John Corpino, who's really fully immersed in conversations here and about this for a long time. Jenny Horn will have the very latest on some of the pre-market movers next.
Good morning. Happy Wednesday. Christmas Eve for those of you who celebrate.
This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas with structure, risk management, and a focus on execution.
From options to earnings to volatility plays, we bring decades of trading experience to every segment.
With real-time insight across products and sectors, we deliver what active traders need to stay ahead.
Okay, let's see. All right. Well, we got a large iron condor today. I see people talking about it in the trading room. Pretty large, 90,000 contracts. I have those strikes set up for tests. Or is it 69.20? 69.20 and 68.90. Let's look at that. 68.90.
Good morning, Nicole. This is really interesting because we know it's been the battle. I mean, it's not really been a battle, frankly, for dominance in this market, but definitely Intel trying to claw its way back to relevance and also just win back some of that lost market share where it's really faltered to AMD, I would say primarily, but also more recently NVIDIA. So we did actually get some reports. NVIDIA recently did stop testing whether it would manufacture its advanced AI chips using Intel's 18A production process, according to various reports, but the pause does represent a setback for Intel as it does work to win these major external customers for its next generation chip manufacturing business. But the tests were part of Intel's push to position itself as a rival to the $1.5 trillion contract chip maker, of course, Taiwan Semi. But we are seeing some weakness this morning as a result of this report.
All right, so I have these strikes set up.
To jointly develop several generations of custom data centers and PC products aiming to speed up their AI and computing workloads across various cloud, enterprise, and consumer markets. But that news sent Intel shares up more than 29%, giving them another lift alongside the recent U.S. government support. So all that to be said, Intel did say its 18A manufacturing process is progressing well, continues to attract really strong.
So I have the 6890 put and the 6920 call ready to go. We'll see what direction we pick. Oh boy, I'm out of it today. Don't feel right. Don't feel right today. I watched, for the first time, my kids watched my cousin Vinny with me last night. I didn't say anything. I was just going to see if they picked up on all of the comments and the language, the accents, New York accent, Queens, Brooklyn. So they really enjoyed it. We were cracking up laughing. That was a good experience. They finally know where my pseudonym comes from. Love that movie. Love that movie. I have to watch that 20 times, 25 times easily. I shot the clerk. Oh man, we've got 8 minutes to go. First 15 minutes, I'm not usually doing much of anything except taking profits off the table, reassessing the markets, looking for stocks with high relative volume compared to the previous 5 trading days on average. For bullish trades with price above VWAP and rising, or high relative volume with price below VWAP and VWAP descending. For bearish trades, today we got another iron condor from Captain. Let's see. Having to double down every time he loses a position, 2 days in a row. This strategy lost. Eventually, I guess if he's got enough money, he'll win. But it's twice the size. It's twice the size of the 7,000 level. Short strike that Chase has. JP Morgan Chase has a collar that needs to roll. 7,000 is their short strike, so that is another level of resistance. I think they have about 45,000 contracts. I'm not exactly sure, but it's usually around 45,000, 44 to 45,000, something like that. So this is what's happened for him recently. On 12/21, 8,000 contracts, 2.4 million in losses. 12/22, 5.7 million. And yesterday, 45 million. 13.5 million, 45,000 contracts. So 21 million in losses before putting on the 31 million in risk today.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you.
Implied balls are 4%. Okay, 4%. You have to buy some options at these. You can see the cost of the strikes are very cheap due to the low IV.
Live or on demand. Head over to schwab.com/coaching and start learning today.
Lotto straddles make sense for Friday.
I'm Marley Caden, live from Chicago. We're tracking market movers, earnings reactions, and what traders are watching next. Stream Schwab Network live.
Sometimes you buy options because they're cheap.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more.
I got 4 minutes to go.
Traders. And with guided learning paths stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Welcome back to the opening bell. We're getting you ready and counting down to the start of trading. Yesterday, we saw the S&P 500 closing at a record high. We were just points away from the intraday high. Joining me right now, we have George Phillips taking a look at the big picture. We have a short trading day today, close tomorrow. Some of your thoughts.
Well, I mean, I'll start with the S&P. Interesting enough, Nicole, if you look at the technicals on the technical picture on the S&P, I mean, we did an intraday high going back all the way to.
Oh, let me get back here.
Actually, when we saw the peak in the broader technology ETF, the XLK, it's down about 5% since then. So we are seeing a rotation because the S&P is nearing highs, where the biggest components are down about 5% just in aggregate. So I think that speaks to the broadening out that we've talked about in the markets.
Okay, we got anything today? We got a 4-week bill auction. Continuing jobless claims was at 8:30. Markets are flat. Continuing market claims or have the markets flat. Continuing jobless claims. 11 o'clock, we got Canadian budget balance. 10 o'clock, we got a 4-week bill auction. 11:30, a 7-year bid auction. And we close at 1 o'clock today. Close at 1 o'clock.
From a discretionary standpoint, interest rates have been higher with the yield curve widening out. That's actually helped the financials, but nonetheless, discretionary gains have actually not performed all that well this year, about 5%.
Right, understood. I mean, when we think about technology, that has been the driver. Yesterday, we saw some bright spots, but that has been the driver for the 3 years. I know you're looking at the XLK and also some specific names, too.
Yeah, so I think if you consider the discretionary camp right now, there seems to be potentially, because I can see this happening play out, underperforming sectors like materials, they've been manifesting higher as of late. So there may be a short-term rotational trader opportunity moving into the broader.
Okay, that's 0 day. Non-0 day, pretty much the same.
XLY, which is the discretionary ETF. So those might continue to the upside as we move into the year. I can't say. It looks like Tesla's holding up, and Amazon seems to be catching a bit as of late.
Okay, so it'll be interesting to see how 0 day changes in the first half an hour or so. Okay, here we go.
They do, and that's the thing. I'm looking at this carefully because
We got 40 seconds to go. 40 seconds.
It's the marginal investor, and I think this pullback is quite meaningful. It's basically in a bear market right now. It's down almost 30% from the highs. Again, just keep this in mind. The reason I'm bringing this up is because we are starting to see the technology gains roll over. The speculative elements to the complex and the commodity space, let's include, of course, Bitcoin is that, which is a technology is already rolling over.
Oh, man. Stupid screensaver.
This goes back to like 2021,
And we're open.
suggesting that, but I think it's interesting to keep in mind that Bitcoin being down so much might be preceding some sort of correction in the market as we move into the beginning of the year, maybe through February. I can't say for sure.
Okay, pushing lower at the moment. Nice little bounce. S&P, nice little bounce.
Well, we also have next week as well. So a lot of these can change. Very narrow volumes. Again, there's a lot of rotation going on. There's been massive movements of hundreds of $1 billion moving from one tech stock to another. Keep in mind, materials is a very small sector, so that has easily pushed higher some of the money that's outflowing in technology. So we're still seeing that rotation occur.
All right. Great to see you, George Phillips, and Merry Christmas and thank you.
Options are cheap. Hedge flow starting to turn down. Micron. Let's see what Micron's doing here. Micron. 3 dojis on Micron. All right, let's look at the NASDAQ 100, see what's actually working today. Okay, here's Micron. You can see on the right, that's the daily. Okay, doji's up there at the high. NXP, semiconductor. Okay, that looks all right. Oh, you know what? Let me use stock charts versions here. Okay. Micron at the top of the list. Micron, Costco, they're all jockeying for position. Costco coming off the low. Costco, Regeneron. Looks good. LRCX has been active lately. LRCX, Lam Research. Okay, Biogen, those were active this week. Biogen, Amgen, etc. Regeneron. Comcast Cable. Comcast. There's got to be something going on with Comcast. Pretty big move off the low. Comcast. IDEX. No, not IDEX. Costco. Micron.
They think that KB Home is unilaterally just causing their own challenges, self-inflicted challenges by stepping away from those tools that had been a key part of the toolkit for
JP Morgan, the banks, they'll start reporting mid-January, I believe. The banks. Looking forward to it. Some more iron condors. January 13th.
All right. Well, look, I mean, we have to wait and see what happens in the world of housing next year. Jenny and Dolly are talking about mortgage rates coming down to 6%. So we will see. Okay, let's get to Lockheed Martin and Boeing. Big news there. Yeah. So look, we've seen a lot in the defense sector this week in contracts from the government. So the Pentagon boosting Lockheed Martin's aircraft contract by $10 billion. That takes it from 15 to 20.
Okay, NXP.
Meaningful increase is not a brand new deal. What's being sold here are these military transfer plans, say cargo, true humanitarian aid, and disaster relief. In terms of the reaction in Lockheed Martin, those shares
M-Chip.
1% right now. Lockheed Martin certainly needed this vote of confidence.
Okay.
Those shares have been little changed year to today. It comes at a time when the company.
All right, so here's what's moving at the moment on the Dow Jones. Nike, Merck, Procter and Gamble. Let's take a look at some of these. Merck, continuation. Merck breaking out. Merck breakout. New highs. XLV. Healthcare tends to outperform during midterms. Okay, I have my eyesight on the 6920 strike and the 6890 strike. That's the iron condor. Okay, so hedge flows are starting to turn up.
There's a regulatory filing showing that he bought nearly $3 million worth of shares of Nike, 50,000 shares, average price just under $59 a share. So that brings his total.
Okay, Apple, nice move on Apple. We bought some Apple yesterday with those of you who were looking at it. Apple looking good. Apple looking good. The first 15 minutes, I'm just eyeballing what I want to take off, take some profits if I'm up 50 or more percent overnight. I'll usually take some things off. Let's see, Lockheed Martin is up. The aerospace and defense names, Lockheed breaking out. LMT, aerospace. Follow through day. Lockheed Martin, watch aerospace and defense. Raytheon, RTX, NOC. And just let these go. I have a position in Lockheed Martin, as you know, and my son has a position in Raytheon. Raytheon, RTX. He bought over here on this red candle. Okay, this big red candle right there. He bought at the low. That's his thing. He buys the low. So 2 days he had to wait through this. Hammer, follow through, got back above the 50-day, and he's looking at blue skies up here. Let's see what Northrop was looking like. Northrop, okay, it's turning the corner too, building the right side of the cup. Okay, Apple's still going here. All right, looking good, Apple. Okay, I have January 275s, Apple. A little bit more out of Apple would be nice. Apple, let's just look at the New York FANG components. It's early. We do have a 1 p.m. close, so keep that in mind. New York FANGs. Okay, we're right at the 100 period moving average and getting rejected. We want to see a follow through. Okay, we felt like we would see some rejection at some of these moving averages only because people look at them and they'll take profits or do things around those moving averages. You can see MACD and stochastics are turned up. RSI is trying to rise, flattening out a little bit today. Yesterday we had breadth deteriorating a little bit after a big pop on Monday. Okay, these are still not out of the woods.
Live insights, actionable data, and market moving analysis. Schwab Network headlines to the why in real time. Watch free 24/7 at schwabnetwork.com.
New York Stock Exchange. Let's see what breadth looks like here. New highs, lows. Take new highs, subtract new lows. We're still above the zero line, so we're in a bullish trend. New York Stock Exchange, green elder stick. Okay, when in doubt about the markets, for swing trade time frame, watch the New York Stock Exchange. Broad measure of market participation. You can also check out the comp, the Nasdaq Composite. Both of these over 2,000 stocks. This is kind of flat. So New York Stock Exchange, about 70% quality stocks, 20 to 25% are ADRs, and about 5% REITs, according to the recent makeup posted by the New York Stock Exchange. Okay, AFJK is up again. AFJK is on the move again. At 70, AFJK is at it again. Okay, AFJK. Apple. Okay, off the highs of the day right now. A little profit taking in Apple.
What retailers are doing promotions, and is that good for a retailer? I mean, maybe
Okay, the New York Fangs, for the most part, are taking a break. Apple's up. That's it for now. Apple. Meta's trying to do something. Apple and Meta. Okay, let's look at, since we don't have much going on here. Okay, hedge flow's still rising. Hedge flow's still rising. Okay, looks like we're going to test the 69.20 first.
So that's something to pay a lot of attention to. The department stores are always promotional. They have to be. I mean, they're in a tough spot right now. And I think that, the Walmart
69.20 appears to be where we're headed for now. Can we hit 69.20 and turn back down and take out the puts too? Take out these lower strikes rather. Futures are on the move. Futures. There goes the futures. A little pop there. Micron. Whoa, there goes Micron. Micron ripping. Okay, let's take a look at Micron. Okay, here goes Micron. Big move on Micron. Man, that was a wise decision to take that losing position off. Micron, this is actually a little bit more than what the position totaled. I just put the 330 in here because that's what I got out at. I got a $1,200 credit, but that was from the previous position. And I do have calls now. Micron calls are working. Micron looking good. Okay, Micron. Lockheed Martin looking good. AFJK is halted.
and use those stores advantageously. And I think, you've seen that with the Walmarts, Targets, Costco's, Best Buys. BJ's did a terrific job. Dick's Sporting Goods did a terrific job.
Okay, Micron on the move. We got hedge flow still rising. We're getting close to 69.20. I didn't think we'd get there this quick, but hey. Algos are algos. 69.64 on the futures. Futures are at 69.64. We're basically flat. We're only up 3 handles right now, so nothing to write home about at the moment. We got a short session today. Close at 1 o'clock. Micron's still going here. Micron. The decision to close this call side of the Iron Condor for earnings and to buy calls. Wise decision. Especially considering what happened after MongoDB. MongoDB also did the very same thing. So tech looks like you'll have to go like 10 deltas or even 5 deltas for the upside. Downside seems to be okay. Let's see what Adobe is doing. Adobe, I have a Iron Condor on Adobe. And then we'll get to some trades here. Adobe, no hurry. Adobe doing exactly what we want it to do. Just sit here and do nothing. $1,300 in credits. Always have about 5 or 6 of these on. It's a rule of thumb for me. As the markets continue to gyrate, randomness, you're making premium just as time goes by. Every once in a while you get a bad one. But overall, 90% of the time you're going to be fine. Okay, so what are we doing here? Hedge flows, a little peak there. Okay, Micron at the highs. Micron. Critical metals, CRML, that one's moving a bit. What is Apple doing? Apple just consolidating at the highs. Apple. AFJK. Is that trading again? AFJK. Got close to 75. No, 70. AFJK got close. Okay, looks like we're going to continue higher. AFJK. AFJK. Do not trade these unless you know what you're doing. Okay, you got to keep an eye on MACD, volume, and price action above VWAP. Look for tests of VWAP to get bought. Watch the volume for it to pick up. Look for the pullback to VWAP. Watch your MACD. MACD has to have some distance between the signal line, preferably crossing over and turning up as you enter a trade. All right, so AFJK. And I would only do like 2 to 3% of my portfolio maximum on any of these names. I'm not saying 2 or 3% on this one name, but using more than 2 or 3% of your portfolio, especially your trading account, for these cheap, risky stocks, not the best idea. All right, just watching hedge flows here. I haven't done anything yet. Looking for direction. We're still chopping around. If you look at the S&P, these first few minutes here, we're just kind of hanging out here. Okay, like yesterday, we had a little range. Basically in a range right now.
So we might see some range-bound action, but you are correct. We are seeing maybe a little bit more of a defensive trade in nature, a little bit more of a rotation taking place right now for this morning. If we look at a longer-term time frame or the 6-month daily chart, if you will, we actually have this setup of this inverse head and shoulders pattern. It's been on the radar for about a week and a half or so, and now we are pretty much at that neckline at 6,900 level. Has been a key area of resistance, and we are at this point in time potentially now over the next couple of weeks here. If you're kind of looking at it, the MACD is actually about to cross in a bullish formation with that 12 EMA, between the 60 EMA actually cross this morning here. You are seeing that RSI shrine. And so if we do get some broad-based participation and you do also see a little bit of a catch-up trade within the technology space as well as communication services, we actually could continue to see a breakout higher here over the next week and a half or so. I would get a little bit more concerned about the first and second week of January. That generally is a little bit more volatile, but for right now, this looks like a bullish setup for the remainder of this year.
Yeah, understood. I mean, when we think about the morning levels, how we started off in the red, but right now, you know, look, I'm seeing us at the highest point of the day on the Dow as they look at that chart.
Yeah, once again, I think this is going to be a compression type of day. Not a lot of volume, low liquidity in the market. So the ranges that we are looking at for today, that's
Okay, here we go. S&P breaking out.
69.20 to the downside, 6,900 your first area of support, and then looking at 68.85. Barring any news to the negative news, it seems like the market's trying to
S&P on the move.
the outperformance is not going to be on the large indexes like the NASDAQ or even the S&P 500. Keep your eye out on mid-cap stocks as well as small-cap stocks. In an environment like this, those stocks tend to kind of outperform as it's easier to push prices to the upside or downside.
Understood. All right. It's great to see you, Kevin Green. Thank you so much. Our market meetup panel is ready as we talked about some of the big movers. Nike, for example, is up 4%, Micron up 3.5%, Citigroup a leader, and Lockheed Martin too, which we covered Lockheed Martin for you earlier. Jenny Horn and George Sillis are back. We could start off with some of the thoughts on jobless claims here. I saw that 214 number. George, some of your thoughts on some of the economic data.
Well, I think the jobless claims number pretty much in balance. We're over 200,000 in terms of claims, but I think seasonal hiring.
Okay, Rocket Labs looks good.
The challenges for the labor market are just
the aerospace, low Earth orbit, et cetera, et cetera. Rocket Labs. All right, so it's consolidating up here. Rhino's building a position. S&P looking for a break to the upside. I'm looking to take these 69.20s. Yeah, they're cheap.
Overall, but nonetheless, I think if you look at the net exports, they're improving in the United States. So the trade deficit is shrinking.
Yeah, those calls are cheap right now. Nike, nice gap off the low here. Merck, Procter & Gamble, Caterpillar building. Apple turning off the 50-day. Apple. JP Morgan, continuation. Salesforce, Disney breaking higher. Disney.
According to the MBA, I think it's interesting because right now on an unadjusted basis, the index actually decreased at 6%, but of course the prior week, but that refinance index decreased at 6%, but still was 110% higher than the same week 1 year ago. And so that does show right now.
Okay, Disney looking good. Trending now. It took a week to come out of this. Looks like it's coming out now in 116. Looks like that's the level. The next pivot where we gap down the following day. Disney turning up, looking good. I have a small call position. I'll add to that. Let's see what I have here. Disney. Disney, I have February 115s. All right, Disney, I have February 115s. A vertical call spread.
Bring the metals up. I mean, what an interesting year. We haven't had a year like this since 1979. All metals at new all-time highs. And I know we focus on gold and silver a lot, but you also saw platinum and copper at highs. And silver, for example, which is up around 140%, has only peaked 3 times in 50 years. this year, January 1980.
Okay, Micron is flagging at the moment. NVIDIA inside day in the top half of yesterday's price action. Tesla still looks like it's consolidating. Palantir is off a little bit. Basically an inside day for now. Looking for a bounce in Palantir.
This could be a share shift from Bitcoin, so you got to keep that in mind. The silver market is not a large market, so it's easily pushed to the upside. I think it also speaks to what I mentioned earlier, which is sort of this aspect of reindustrialization of the United States. I think that's part of this. The other part of it could be going forward. We haven't seen it manifest yet in crude oil, but it could speak to some inflation going forward. So that's something to keep in mind. But generally speaking, the inflationary concerns.
So Disney looks good. S&P is still going here. We got hedge flows turning up. Okay, we're going to take out 69.20 for sure. It looks like for sure. Okay, there goes Broadcom again today. Broadcom at it again. Meta going. Meta's going. Apple's at the high. Futures continue to rise. We got the 5, 15, 30, 60 on buy signals. 5, 15, 30. What's tick cumulative doing? Tick cumulative still hasn't turned. SOBR sober. SOBR sober. Hedge flows just grinding up. There goes Meta, looking better. Okay. AFJK.
No overdraft fees and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking.
AFJK just jockeying around here. SOBR, riots down. SOBR.
That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
SOBR. Inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the
S&P
things is you're making a play in a risk.
initially breaking out, trying to follow through. 69.20 looks like the first test. We're looking for 69.20. Okay, notice the red zones, okay, and the purple zones for that matter. The purple area is pretty much look for prices to stay relatively calm, you know, small moves. Once we get into the red zone, price action can pick up quite a bit. We can see some quick moves to the upside, quick moves to the downside. All right, right now we're in the middle of the purple zone, so just looking for maybe a slow grind higher. We close at 1 p.m. today, so these trades need to work soon. Theta. Okay, looking for a higher low here on the S&P. Okay, let's see if we can't follow through here. Options are really cheap. SOBR. AFJK is trying to tag that 70 level. There goes AFJK.
Welcome to Morning Trade Live. I'm Tom White in for Sam Vadas. We've got plenty to hit on both here and abroad over the next hour. Here's a look at what's coming up on today's show. We'll dive into what investors can expect on both the equity and energy markets with Barry Knapp and Carly Gardner joining us this morning. And over the next hour,
S&P just a slow grind for now. Okay, once again, let's look at what's working on the Dow Jones. Nike coming off the low. Nike after earnings, nice level, pushing back up. Needs to get above the 50 and the 200-day. Got a ways to go. I believe Tim Cook bought a position, you said? Tim Cook is into Nike? Or whatever that means. Is he going to like become a CEO there? All right, S&P is still trying to push through this level.
Down at nearly 0.2%. DAX, I think, was closed today. Nikkei 100 out of Japan down 0.14%. The Hang Seng up 0.17% in today's markets. Now let's take a look at some of the other asset classes you should be on your radar. We've got the 10-year yield continuing to consolidate at 4.16%. U.S. dollar fractionally higher, and the dollar hit 2-month lows yesterday. Gold coming off of another record overnight high, but down a little bit here today. Crude oil up nearly 0.4%, back above $58.50 a barrel, and Bitcoin under pressure down
Nike.
7%, hovering around that 87,000 level. All right, let's bring in our first guest. It's going to be Kevin Green, senior markets correspondent here on the network. Kevin, let's get your trade takeaways from today's trading. We're on a 4-session win streak for the 3 major indices here. Santa Claus might have come in a little bit early, but
Palantir turning. Palantir as usual. Dip and rip. Palantir.
January. The last 2 years, we haven't had that Santa Claus rally. We always talk about it every year. Could this be the year that we break this losing streak?
Palantir starting to bounce.
I hope it is, Tom, because we've actually never had a situation where we've had 3 years in a row where the Santa Claus rally did not come to fruition. So you would think that we should see a little bit of a rally to the upside here. For today, obviously, we have a shortened trading session, so I'm not expecting any massive moves either to the upside or downside. You're really looking at maybe a 30-point, maybe a 35-point range for the S&P 500, and you are seeing volatility still coming in, standing at around 13.7. I get a little bit concerned about that, Tom, but maybe if we're able to kind of hold these levels for the next week and a half or so, once we get to January, first week, second week of January, I would get a little bit more concerned that volatility could actually re-rate a little bit higher, especially leading into
nice little grind higher.
Leading in January as well. But this is actually a pretty decent session. We are seeing actually a rotation, a little bit more defensive in nature, maybe some stocks that actually are also interest rate sensitive as well as consumer staples, real estate, as well as financials are actually leading the way. So overall, pretty decent session. Once again, I'm not expecting any big fireworks.
Okay, so you can see the call wall up there at 6,900.
I like to call it when the holidays come around. We close early today at 1 p.m. Eastern time, off tomorrow. So maybe that VIX
6920 is the call wall now. Okay, so we're headed in that direction. 6920 is where Captain Condor has short strikes overhead. Palantir starting to go. Palantir going now. Okay, let me take a look at my Palantir position. Do I want to add to this? Do you want to add to this? Do you think I'm sexy?
Pretty good numbers, right? They're low numbers, but then you've got that unemployment rate at 4.6%, and that's been ticking higher. It's almost like we've got a bifurcation between the week-to-week data versus what we're seeing in the jobs market. And I know a lot of those numbers are clouded because of the government shutdown. But what was your takeaway here from jobless claims today?
Yeah, they were better than expected.
AFJK pushing higher.
214,000. She was looking for 224,000. Tom, I would say the unemployment rate. Just be mindful too. A lot of
S&P still grinding higher here. S&P. Okay, so let's do a quick review of the markets. Let's see what they're doing here. Okay, it flipped completely, almost. We got 305 stocks advancing on the S&P 500. Yesterday, we were down to like 150. At one point, 150 advancing. The rest were declining on the S&P. Today, we're at 300. The Qs are just marginally more than 50-50. We're at 55% advancing out of 100. 55 stocks out of 100 are advancing. And IWM really not giving us much of a show. What's IWM doing? IWM. Okay, IWM is just kind of taking a break. Yeah, that kind of makes sense. As IWM is only 670 stocks advancing. Bollinger Bands are contracting. IWM, so maybe we'll get something on IWM next year. Presently, the S&P is just grinding higher up towards that 6920 strike. Options aren't moving that much, despite the fact that we're almost at 69.16.
It seems like that CPI inflation, there might have been some trickery in
NIMO is pretty much flat. NIMO is at the zero line, basically, +4. No momentum.
A couple years of 20% gains. There's nothing out there to say that, hey, we're going to get into a recession next year. There's more trouble coming down. There's going to be headwinds in 2026 because with deregulation coming, maybe the consumer flips a little bit. Maybe that K-shaped rally that we've had kind of tightens up a little bit. There's some good things on the horizon, and maybe the optimism in the equity markets is warranted at this point, right?
Yeah, that might be the case, Tom. I think also just the question mark of where are we at when it comes to this cycle? Are we in the 1993 phase where we see this expansion?
We got earnings coming up in 2 weeks. 3 weeks. We got earnings starting with the banks, starting the earnings season again. Looking forward to selling some premium. Love selling on iron condors during earnings season. Capture all of that implied volatility. All right, we're headed towards that 6920 strike. Looks like we might go in the money there, Frano. Okay. 6920s.
Usually when we see kind of these recessionary signals hitting the market, it's because of an event that may not be on the horizon. And I think credit availability is going to be a big thing to kind of focus on, at least for now. And we'll see how the data actually kind of comes in. I still find it very hard.
Okay, so Morgan Stanley, that was a nice idea, Frano. Morgan Stanley, JP Morgan, the banks, JP Morgan, follow through. Goldman Sachs. Goldman Sachs. Okay, just kind of consolidating. Morgan Stanley. Notice the Bollinger Bands are tightening up a bit. S&P still going here.
CPI at 2.7% on the headline, 2.7% on core. KG, let's flip it to your specialty here, the commodity space. Gold, silver hitting more fresh all-time highs overnight. I mean, this is just like,
Micron still going.
Commentary that we have on a daily basis here recently.
Yeah, it has been. Everybody's turning into commodity traders, and I love that. I mean, if you're kind of looking at the outperformance for a lot of these.
Okay, let's go in the money. SPX in the money.
There's concerns out there from a geopolitical risk standpoint, Fed policy and central bank policy around the world. Also, also being priced in, fiscal policy also being priced in as well. And that's it's not a negative sign. It's just something that we have to just be mindful of, that if we do see inflation still remaining sticky and we have this overheating of the economy, that's good for asset values. You just need to have that outpace inflation. This chart here is the silver gold ratio, the gold silver ratio. That orange line moving to the upside just means that gold is outperforming silver. That orange line moving to the downside means that silver is outperforming gold. And I also have the Russell on there as well. That's that blue line. If we continue to see this trend where silver outperforms gold, that really does.
It is Christmas Eve. We do close today at 1 p.m. So any trades that you're taking that are 0 day, just keep in mind you're going to want to close those.
Keep your eye out on this. Now, one thing to note, it has been actually a little bit stretched here, Tom, as you can see that line moving to the downside. Does this actually continue through 2026, or do we actually see that stalling out? We can see in the past, over the last 20 years.
Okay, S&P is still grinding higher.
We start seeing gold actually outperform silver.
Man, this iron condor trade.
Confirming the bullishness in the market.
90,000 contracts.
Getting a little bit toppy, but that's not stopping people from getting into these markets. Gold up 70% so far in 2025. All right, great discussion here. Thanks to Kevin Green. Happy Christmas there, Kevin. Have a great couple days off here. Now, coming up after the break, we're going to take a look at the bigger picture for the Fed and rates moving into 2026. Barry Knapp from Ironsides Macroeconomics will join us next. Morning Trade Live coming right back after the short break.
Okay, Micron's still going here. Micron. Okay, Micron looking pretty good. Micron's having a good day. The strength in this one just warranted, let's just get out of those iron condors. The call side, we took the puts off on earnings, but the call side gave it a couple of days, did roll some for a credit, and then, this is just not going to work. Everybody's talking about it. Maybe January we can see these pull back in, but for now I'm just riding the trend. The trend is bullish. I am watching this moving higher on lower volume. You see that on the right? Okay. The volume tapering off as we're ripping higher. That's kind of curious. Not a reason to short it at this point, but it does look good. Hedge flow still rising. Okay, we're starting to get something going here on these 6920 calls. Micron at the highs.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning.
Yeah, Joel, I agree with you.
We're experiencing technical difficulties.
Carl.
I got silver puts
A modern approach to wealth management.
for now.
No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen.
Okay, just want to check what I have here before I. February 60.
Trade Live. Nike shares are higher this morning after Apple CEO Tim Cook disclosed a purchase of 50,000 Nike shares in a transaction worth nearly $3 million. Cook has served on Nike's board since 2005. Nike shares are down nearly 10% this month after the company issued a gloomy sales forecast earlier on their earnings report. Now let's take a look at the S&P 500 leaders here. Nike leads.
Okay, S&P still going here. S&P. All right, so we're going to be in the money here shortly.
Citigroup, Jane Fraser kicking some butt over there, up 2.2%, up over 73% on the year. And Costco on an upgrade on the North Coast, up nearly 2%. That's been on a 10 slide for Costco shares. Now let's
90,000 contracts. Oh, jeez.
Coinbase on the weakness in Bitcoin down a little bit, and Albemarle off just over 1%. All right, let's get into a discussion about Macroeconomics, the Fed. Let's bring in Barry Knapp, Director of Research at Ironsides Macroeconomics. Welcome to the show, Barry.
Morning.
Hey, good morning. So we've got the Fed, 3 cuts so far this fall. It seems like they're coming in line. Inflationary data, even though it was lagging a little bit, 2.7% on the CPI headline, 2.6% on core, which is great. What are your expectations for the Fed moving forward? Because it seems like we keep pushing any further rate cuts off in 2026.
Yeah, I think we need to step back and on this whole Fed discussion and get a little broader perspective on it. When the Fed eased during the pandemic, they had the policy rate at 1.5% when the pandemic started. They lowered it to 0 immediately. It had almost no impact. They then purchased the equivalent of 250 basis points more of rate cuts in terms of the.
All right, here we go. 6920s.
That they bought. So treasuries and mortgage-backed securities. That had a profound effect on the housing market, and it had a profound effect on allowing the federal government to be able to finance all the stimulus that they financed. And so if we go back and we think about what caused the inflation spike in housing and the housing component of CPI, it was the Fed, right? Driving mortgage rates to all-time lows and the spread of mortgages to treasuries to all-time tights, which attracted private equity into the residential housing market. And then, of course, the fiscal stimulus, the sending of checks, caused the spike in goods and non-housing services prices. When the Fed decided to tighten, rather than unwinding their balance sheet, which was the real inflationary impulse, they instead raised their policy rate. That essentially created or exacerbated this whole K-shaped economy debate we're constantly having.
Oh boy, here we go. There we go. There we go. All right, so we're starting to rip here. S&P. For those of you still in those calls, thanks, Nick.
For small businesses, the Russell 2000 versus the S&P, we've had this huge dichotomy until the last month or so. And this was all caused by the Fed's unbalanced tightening policy. So when we think about what's going on with the Fed right now, what's far more important is that the Fed continue to lower that policy rate, get it to 3%, which I view as neutral, but continue to actually engage for the first time ever in duration tightening. And what I mean by that is the Fed's decision to reinvest mortgage-backed securities into Treasury bills rather than in Treasury coupon securities like 5-year notes or 10-year notes and actually shorten the duration of their portfolio will actually rebalance policy.
JP Morgan strike is at 7,000. Can we get there? Oh, shit. That's crazy.
And the larger institutions. That's what Treasury Secretary Bessent's talking about. That's what Kevin Warsh is all in on. I think Waller really understands this. Certainly my old colleague Rick Reeder understands this. And I think Kevin Hassett probably does too. So when we talk about Fed next year, I titled my Outlook note duration tightening. I sort of reject the QE versus QT mantra because
wow.
They can add reserves to the system. That doesn't really do very much. That's the real definition of QE. They can drain them. That's QT.
Okay, futures coming back in a little bit.
Their purchase of longer-term securities and what that does for the price of longer-term
6920s.
securities, which is how we price equities.
Notice the volume on 6920.
Actual capital investments. That's the real issue at stake here, and that's the dynamic we're coming into next year. The way the Treasury and Fed some of the Fed at least hope to offset this is by loosening bank regulatory policy so that the banks can actually absorb a lot of those longer term securities and determine where capital is going to go, not the government. So I realize that was a lot, but it's a really important dynamic that we're going to get into next year is the Fed starting to actually reduce the
Okay, so this is not even important anymore. That's gone. VWAP's still up and to the right. Notice your MACD. Notice MACD. Okay, a little bit of profit taking as MACD flattens out a bit. We want that to turn back up and volume to pick up again.
tighten out here a little bit, whether it's a 210 or the 3-month 10-year. When you look at that moving forward, you expect that to continue to help support.
That's got to be painful. That's got to be painful. That iron condor, 90,000 contracts. Wow. Just wow.
That they're going to be taking maybe some of that risk off the Fed's balance sheet.
Yeah, if you think about small banks versus big banks, right? The big banks have had a big move, and they've traded well. They're trading at about 1.6 times book. I think that could go higher as we get regulatory relief. We lower the GSIB surcharge. We change the Basel framework that encouraged them.
Okay, is that going to be it for today? Is that going to be the high, or are we going to follow through?
And the small banks will get all that too. But
There's some selling up here, most likely due to that iron condor.
The median of that 3-month 10-year curve, so roughly deposit rates versus making longer-term loans, since 1941,
Okay, what else is going on
when we got
here?
these,
Okay.
these securities, is 140 basis points. Right now, 1.4%. It's 50 basis points. So another 50 basis points of
Apple.
policy rate will
Apple's still flagging at the high. Apple.
small banks to start extending credit, growing their asset base, and you could have a real run in those small bank stocks. To me, that is the most obvious trade for next year is the banking sector, because this regulatory policy is coming no matter what happens to the midterm elections.
All right, I took a little profit in Apple. I have some Apple calls.
Really confident that
195s, 275, sorry, 275s. So those are up quite a bit today. I'm just going to reduce my exposure a little bit. Just mainly because tomorrow is Christmas and not doing much. I still got 5 of those call flies left. Might take them off.
Extending gains. If you look at the markets here heading into 2026, Barry.
Okay, notice the volume. People taking profits here. Let's see if that's going to be enough. 90,000 contracts. That's a pretty big level. Be funny if they rolled this, if they ran this higher.
As optimistic as I just sounded on the banking sector, I do think we're going to.
Okay, Microsoft turning up. Right, Microsoft. Do have a position in Microsoft for the past week. Looking for some gains there. Let's see. I have February. Microsoft have February 490s. Also have 500s. Microsoft. That's okay for now.
Into Treasury bills. It started actual duration tightening. So in a lot of ways, I'm expecting something akin to what happened in early 2018. If you recall, we rallied throughout 2017. We had this absolute collapse in market volatility. We were,
Micron. Okay, Micron.
Tax Cuts and Jobs Act, the lowering of the corporate tax rate, which boosted earnings roughly 10%. The market rallied in January.
I'm going to take a little profits in Micron up here at the high. I'll keep like 5 of these calls left. Micron. Again, just reducing exposure for the holiday. We'll be back on Friday. Disney looking good. Disney. I'll hold on to Disney. That looks pretty good. Looking for a follow through. This trend to develop a little bit more. Micron. When is Iger supposed to turn over the reins? I don't know if they've. Oh, it's a CFO, right? The CFO is taking over on Disney. Is that what it was? Disney, Iger, retire. Bob Iger is planning to retire as Disney CEO. It's late 2006. Company expected to name its successor. Focusing on internal candidates. Okay, I see a couple of problems with the people that they're suggesting as potential candidates. I'm not going to say because I don't want to come across the wrong way, but I see a couple of problems just looking at the names. Okay, Microsoft moving higher.
The way these booms and busts were. I don't think next year's the end of it, but nevertheless,
Looking for a bounce.
probably a decent pullback like we had in early 18.
Okay, so Micron, I took a little profits on Micron just now. Okay, we're starting to fade a bit from the high. Costco coming off the low, a reversion, mean reversion trade. Maybe you do something here on Costco. You can see the daily here coming off the low. I would target the 21-day and the 50-day. Ultimately, if we can get back to the 200-day, that'd be great. I don't know why we're off, but it's always busy when I'm there. Costco's always busy. Let's see, Costco. TJ Maxx always busy. There's Costco. Costco beat. Okay, they report again in March. Earnings growth, 13% for a retailer is not bad. 13%. 8.3 for revenue growth. They beat the top expectation. $67 billion reported income. Costco, yeah, that looks like a good candidate. Costco looks like a good candidate. For those of you who like to swing longer term, starting a position, put a stop on today's low or 50% of today's price action. All right, looks like we're going to bounce here, S&P. We get off at 1 o'clock today, so
Welcome back to Morning Trade Live. Let's talk the energy markets. Joining us now is Carly Gardner, Senior Commodity Strategist.
what's AFJK doing? AFJK keeps jumping around.
All right, so we're talking crude oil, Carly. We've seen a little bit of a resurgence on some geopolitical tensions at this point, but crude's fallen. We got gas prices.
All right, S&P turning back up. S&P. Hedge flows. If we get into the red zone, this could get really crazy. I don't think we will, but if we get above 69.20 and start to accelerate towards 69.40, this could get crazy. Presently, the markets are not pricing in a big move. You can see 53% on the stability. Okay, the lower the number, the more volatile. Palantir dips tend to get bought. Palantir living up to its recent price action. And personality tends to dip. Buyers tend to come in. Got a feeling the momentum traders are in this one. No way to prove it, but I got a feeling they're in the momentum traders are in Palantir. They know they sell into the highs. They buy the dip. Lately, that's been working very well for Palantir.
There's some sort of news that sparks a little bit of a flutter on the upside, and maybe we get 65. But as long as oil holds below 65, I think the risk is to the downside.
Okay, Micron.
Schwab, I think it was last week I mentioned.
Okay, the top 10: Micron, Costco, Pinduoduo again, Biogen, Comcast Cable, Vertex, CDW, Hardware Software Technology, Workday, Dexcom, Charter Communications, Kraft Heinz, and LRCX rounding out the top 10. Lam Research has been pretty active lately. Apple is drifting a little bit lower, but staying near the highs of that morning pop. Meta, same thing. Broadcom, a little profit taking there. Okay, hedge flows turning back up.
Which means generally bottoms and tops in crude oil are made on high volatility, not low volatility. So lastly, those washouts that we've talked about in the last week or so on this program and other programs. They generally occur in February and March. And in 2020, it actually extended into April, but the season is very ripe for a big sell-off coming into the new year. So we want to be really careful about having exposure on the downside, just in case we do get a repeat of the last 3 bear markets.
Yeah, Carly, I read a tweet of yours where, I think it was $15 a barrel. I mean, I get that because it's...
All right, SpaceX valuations have been rocking higher.
Just gone over that. Even if we do get this rally like we saw in 2024 at the beginning of the year, at the beginning of this year, also, it's going to be fragile, right? Any rally that we get from here, unless geopolitical, risk picks up.
No, I think you're exactly right. And we should note that the rallies over the last handful of years in oil have not been for the right reasons. They've been for the wrong reasons. This geopolitical tension, it's not for expectations of growth or growth in demand. So until that changes, and maybe it will, we'll have to see, time will tell, but until that changes, the path of least resistance is lower. And you're right. If you chart out the lows from...
Okay, S&P, looks like we're going to take that high again. Potentially. All right, we're at 69.20. There's some people selling in that area. That iron condor strike. It's a pretty large position at 90,000 contracts. That's the largest thing I've ever seen in one trade. That's double the size of what we normally see for the JP Morgan collar. Their short strike is positioned at 7,000 overhead.
So if we do get down to those levels, there's going to be a lot of reasons for people to buy, and there's going to be a lot of ammo on the sidelines ready to come in and buy.
Yeah, and maybe those traders have actually been using those speculative bets for the gold.
Okay, let's take a look at junk bonds and see what that's telling us. Telegraphing anything. All right, junk bonds looking a lot better here. Okay, junk bonds back above the 50-day. Notice the Bollinger Bands. So my expectation is that junk bonds are going to stay inside of these Bollinger Bands, 95% probability. Unless something changes, like RSI starts to rock, or maybe there's some catalyst that shoots junk bonds back to the highs. Gives traders the idea that there'll be less risk into first week of January. Junk bonds, okay. Let's see what the 10-year yield looks like. That'll be a headwind for small caps if it's rising. It's just kind of hanging here. Small caps, IWM, starting to get a little bounce. Don't expect much more than the top Bollinger Band or this 255 strike in the short term. IWM starting to bounce. Okay, let's see what IWM is looking like. Okay, that's starting to rock.
This is probably a really great time to buy gold. If your time horizon's a couple years, this is probably a really dangerous bet. And I will also add, there's a lot of discount brokerages out there that really only offer futures trading in a handful of products, crude oil, gold, S&P, and maybe the euro. And so what you get is speculators really piling into these handful of assets because they really don't have anywhere else to go, and there's a lot of money sloshing around in the system. So in my humble opinion, and I've been wrong in metals,
all right, Apple looks like it could maybe continue. It's starting to gear up a little bit. All right, IWM looking good. S&P, IWM. IWM starting to break higher. IWM.
All right, great discussion, Carly. Have a great holiday. Thanks for joining us. That's Carly Garner, Senior Commodity Strategist and Broker at DeCarly Trading. But coming up, it's time for the morning trade. We're going to take a look at
nice bounce.
Shares are under pressure today ahead of the early close.
Palantir looking for follow through.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time learning. Trade brilliantly. with Schwab.
From the most iconic trading floor in the world, this is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange. The countdown, the setups, the stories that make markets move. Minute by minute breakdown of the biggest headlines, earnings, and global movers, just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
Oracle. All right, so what's Oracle doing? I see the calls are up today. Oracle. Oh, nice. Nice Oracle move there, Frano. Oracle, finally green again.
With NVIDIA in September, but shares are under pressure today after Reuters reported that NVIDIA has stopped moving forward on testing Intel's chip manufacturing process for its NVIDIA chips. Let's focus on that with our next guest. And that's going to be Marley Caden, the host of Trading 360. You know, this story,
Oracle.
denting the shares a little bit, but stocks
Finally green on that one again.
I mean, it's up 78% this year. It's had a great run, but the story putting a little bit of
Oracle.
Yeah, certainly not going to change that momentum into year end, but has some bigger implications here, Tom. You know, Intel has been picking up momentum on the deals front. You said we've seen that performance being rewarded, but its manufacturing unit may be struggling to produce quality in-house chips. Now, Reuters is reporting what you just mentioned, that NVIDIA is abandoning prospective plans to
Oracle, finally green again on that one.
after recently testing out Intel's 18A process. Designers like NVIDIA and Broadcom had run manufacturing
IWM pulling back. S&P. All right, we're at the call wall right now. Dealers have an incentive to keep it below the 69.20 level. We also have that large iron condor, 90,000 strikes, 90,000 contracts rather. Palantir looks like it wants to go some more.
As well as the Broadcom commentary that they were testing this production process out, but NVIDIA and Intel not commenting so far right now. We are seeing a drop off in NVIDIA today as well, trading down about 1% after being up about 7.5% in the last 5 days. Intel flat.
AMCI, you looking at?
We're going to have a Santa Claus rally, Tom. Every guest that I've spoken to has said that
AMC Robotics. So yeah, that was active a while back, right? A few days back. AMCI.
Significantly over the last 4 or 5 sessions also, so maybe Santa Claus came a little bit early for NVIDIA. All right, great stuff. Thanks to Marley Caden, host of Trading 360 here on the network. But now let's trade it. Let's bring in our next guest. That's going to be Scott Bauer, CEO of Prosper Trading Academy. Welcome back to the show, Scotty.
Tom, it's been a while. How you doing?
I'm doing great. I hope you're going to have a happy holiday season. But let's get into this discussion about Intel. It's pulling back here a little bit. How do you want to look at this one from an example trade?
Yeah, it seems pretty unfazed by this news, actually. And technically, the stock actually looks pretty good with some support here right at the 50.
Okay, S&P on the move. AMCI, I joined you, Frano.
I'm selling the January expiration, so about 3 weeks out. The January expiration 35 put. Collect about $1.25 on that. So if I get assigned, I own the stock at $33.75. I am okay with that. Typically, I like to do spreads
because they're short.
Have that protection. But if Intel were to go down to 30,
because they're short, Chris.
Buy the stock anyway. So I'm going to look at this news and say, yeah, the market's just kind of sloughing it off here. Gives me an opportunity to buy Intel cheaper if it goes lower.
Yeah, and this cash secure put type of strategy, Scotty, I always think about it as a twofold type of strategy where, hey, if I'm wrong and the stock doesn't go down, and I don't get to buy the shares lower, hey, I just get to keep that credit because, and I think this is one of those strategies.
Yeah, so Chris, the deal is the dealer 69.20. A lot of people. This Iron Condor also sold some contracts at 69.20, but the dealer is also short 69.20. So a move above 69.20 creates a short squeeze, right? So the dealer has to buy the underlying if we pop above 69.20. I mean, among other reasons. You got this Iron Condor with 90,000 contracts there that they sold. So getting above 69.20 would be very beneficial, especially.
Scotty, as usual, have a great holiday.
especially if you're long, looking for a move higher, a blast to the highs as a crescendo going into the Christmas holiday. Yeah, me too. I like robotics.
Morning movers, be the first to find out what's shaping early market action. Tech check, options corner.
Okay, S&P. Trying to get through this area. All right, New York Fangs are looking a lot better. Oh, that's not the Fangs. This is the Fangs. Okay. So this is, what am I looking at here? I'm looking at Walmart, bouncing Walmart.
Download the Schwab Network app and stream any.
Okay, let me go AMCI here. AMCI.
Live from Chicago, this is Trading 360. I'm Marlene Gaten. We track
AMCI.
macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context.
Palantir.
Data to sector rotations, earnings to policy.
Nike. Target. All right, Target and Target. Okay, all of these are looking good now. Micron. It sold some Micron at the highs, just reducing my exposure a little bit. Short-term options. I had January. I might do something like, I don't know, mid 2026. We'll see. All right, here we go. S&P is on the move.
Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant, I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Welcome back to Morning Trade Live. I'm Tom White in for Sam Vadas. It's time to take a look at sectors and markets and what's going on this morning. Let's bring in Kevin Hinks, co-host of Fast Market with me. Kev, you take a look at pure holiday trading here in this shortened session today. Not surprising, we're not seeing a lot of volatility, but that VIX continues to fall. But maybe it should be down here, Kevin, with the S&P 500 at record highs.
Yeah, exactly. It's drifting, Tom. The market's drifting, and as long as there's no news that disrupts it, the drift is probably going to be higher into the year because a lot of the data we're getting is moderate to better, right? The GDP data we got, jobless claims this morning. So there's parts of this overall earnings season, economic data, forecasts into next year that are all slightly positive. And what that does is that just takes any reason to sell the market here. And I think you're looking at the big drift, Tom. Half day today, we're not open for very much longer. And I think this market is, in all honesty, let's get it open, let's get it closed, and let's get celebrating.
Yeah, let's get it closed is right.
Okay, we're trying to get a little bit higher here.
I mean, think about the Goldilocks data that we've gotten recently. GDP, the CPI data, jobless claims this morning. I mean, we always talk about this most hated rally. There's a bunch of skeptics out there. Why are we rallying 17, 18% in the S&P 500 after 2 years of 20% gains? But hey, the data and earnings basically support what's going on in the equity market, right?
Yeah, I just had a speaking engagement in Florida, and I talked about some of the inflation data that we got from CPI and how some people were discounting it or doubting the data. And all I did, Tom, was put up a one-year chart of crude oil. I said, if anyone tells you that inflation is higher or strong, look at that chart of crude oil. It's undeniable what's going on. And crude oil, such a big part of CPI, that energy has come down. We can't deny it. So look at the overall data. The job market is the only real problem right now. And
Okay, we're about to take out the highs. This iron condor has got to be problematic for Captain Condor.
Yeah, and those continue to come down. They're not priced in a cut now until June.
Come on, can we pop through this area? Can we do it? Hedge flows continue to rise here. Hedge flows continue. We get into this red zone. This gets really crazy. Crazy. We could rip this here.
I had Barry Knapp on earlier. He's saying that we're going to maybe get a pullback in that first quarter. But the dip buyers will probably be out if we see any weakness, unless it's maybe a black swan event, right?
Well, certainly there's always a chance that something could disrupt a market that goes straight up. Even the best markets don't go straight up.
Yeah, whatever. Even the best markets, all the same stuff, saying the same stuff over and over and over.
Be news headlines that shake the market, rattle the market. Of course there is. Now, what does that do to interest rates? If there's some global sell-off, that could take interest rates down really quickly. So these are all the things that would bring in dip buyers, right? If the market sells off and interest rates sell off, dip buyers will show up, Tom.
Yep, we've seen that repeatedly, Kevin. Hard to keep that consumer down and the investor down. All right, great stuff. That's Kevin Hanks, co-host of Fast Market with me. But coming up, it's time for Inside Out. We'll take a look at Walmart and bring you an example trade when Morning Trade Live returns.
Hey, investors, you know the market moves. Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
That could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, and more.
Okay, so the hedge flows looking like we're going to pop through this area. We should go. All right, this is pretty exhilarating for a short day. We picked a direction very quickly. That's nice. See if we can get above this level.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
We're back here on Morning Trade Live. Last minute shoppers. Now is time to shine. Here's where some of the biggest retail names are trading on Christmas Eve. Better get that shopping done. You got about, not too long. Less than 12 hours till Christmas Day, or about 12 hours until Christmas Day. Walmart up. Target rallying a little bit. Costco on that upgrade on the North Coast. And then Amazon all higher expectations for retail sales during the holiday shopping season. Coming in pretty good from MasterCard and Visa also, and National Retail Federation. All right, let's go inside out on Walmart and the rest of the retail sector. Joining us now is Bert Flickinger,
Managing Director of Strategic Resource Group.
Okay, can we go some more here?
Walmart, it seems like
Can we pop through this?
scale. They're doing things right.
It would be really nice to see this follow through. Dang. Dang.
Tom, Walmart service harvesting the seeds that are planted in the 1960s and the decades ever since. Walmart number one in CapEx and technology with IBM and the major providers. Walmart number one in e-commerce. Walmart number one in acquiring and buying the best talent. So Walmart's international e-commerce sales, Tom, are up 27% versus e-commerce being up 5% in the U.S. So now, Tom, you have the situation with Walmart dominating on land as it has for over 65 years, but now dominating in e-tail or internet retail. And Walmart is
Okay, we got a little bit more than what?
in addition to being the worst nightmare of every
2 hours to go. Wow.
Walmart wins. Many others will be part of the casualty count.
Yeah, and you look at this, they're increasing margins where we've had some bifurcation in the retail space at this point, Bert, but at the same time, their execution, their use of technology, their expansion of Walmart Plus is probably the reason that a lot of people are getting more optimistic on this stock.
All right, looks like we're going to grind higher here.
Elevated on this name, Bert.
Tom, you're completely correct on Walmart Plus because it's a great deal for the shoppers. It's a better deal than Costco Prime and Amazon Prime equivalent. And you can get a total shopping center deeply discounted, delivered very quickly. And for, as you said, we're getting close to Christmas.
Okay, breaking above this structure here. Got a nice little buy order block as a byproduct. MACD's kind of flat at the moment.
So Walmart's replacing the Roman empires of retail power shopping centers, becoming self-contained shopping centers unto itself. Walmart.
I got a hard stop here at 1 o'clock. I got to go run to the bank and get some cash for presents for the holiday. Okay. Okay, looks like we're going to pop through this area. You can see what's going on here. As we move higher, this negative gamma over here is creating a problem. We can see price action rip into this area. We're above 69.20, trading 69.22.
If you think about it, Bert, moving into 2026, do you expect more gains for this stock?
Tom, very prescient point you're pointing out is that Walmart, even though it's trading at 40 times versus the
Our futures continue to push that upper envelope.
trading about half that rate, Walmart is still a value stock, and the reason it's a value stock is 41 of its top 100 competitors in food, drug, discount departments, and dollar stores have filed for bankruptcy or liquidation.
All right, so the 69.20s are up 100%. A little bit more. 220 to 450, 460 offer at the moment, 470 offer. Looks like we're going to push a bit high. There we go. So the 69.20 is doing well. Because we had such low vol this morning, these aren't doing as much as what I thought. Plus, we got a half a day, so S&P, nice little pop there.
Returns through a size, scale, and skill that's unparalleled anywhere now.
Okay, here we go. Oh, man.
This year, and you're expecting that next year. All right, great discussion, Bert. Have a great holiday season. That's Bert Flickinger,
Target?
Director, Strategic Resource Group, breaking down Walmart for us. But now let's trade it. Let's bring in George Tillis, Senior Market.
I'm surprised we're this far ahead, where we are right now. I wouldn't be playing the upside at this point. The upside should have been looking earlier. Okay, MACD is turning up. So what I'd be thinking, what I'd be looking for is some resistance up here, people taking some profits. I wouldn't be looking at taking new positions. That was earlier. If anything, when MACD started to flatten out and we pushed up against the 69.20 level, that was another area to maybe look for a follow through. But now I'm thinking, going to be having people taking profits here. We got 1 p.m. close. We could get a little rip, but at this point, I wouldn't be doing anything.
Harvest some yield, but also mitigate the theta decay as well as some volatility elements between the two strikes. I'm going to sell right around that 109 area. So I'm going to sell the 109 put, buy the 106, a $3 wide spread below that. Now, altogether, you could earn about 70 cents a share or $70 a contract. So the whole premise behind this trade is, the stock could continue to pull back just a little bit, back to that shelf that I mentioned at 109, that rising 50-day moving average. If you do structure this trade, your max gain is the 70 cents per share. Then you have to consider the risk. The risk is, of course, on the 70 cent credit earned is $2.30 if the stock hits 106 or lower by expiration. So, again, lining the price action with the probabilities, because the 109 strike put that you're selling in this case, as an example trade, represents about a 32 delta or an implied 68% probability of profits by expiration.
Passive, neutral to bullish, short put vertical, 109, 106 for 70 cent credit, 65% probability that 109 strike will be out of the money at expiration, which is what you want. And after that rally that we've seen, maybe a little bit more conservative, but you do have risk below that 106 level. All right, great breakdown for us. That's George Tillis, senior markets correspondent here, breaking down Walmart example trade. But that's going to wrap it up for us.
Yeah, we seem to be a bit extended now. I don't know. If you look at yesterday's price action, that was a pretty decent candle there. So can we see a repeat of that? We're at new all-time highs, by the way. SPX. All right, S&P is at a new all-time high, by the way. Okay, so failed to mention that. Okay, so 69.20 over here was the previous high. All right, we're what? 69.22, 92. So Bollinger Bands. See how Bollinger Bands are starting to open up? This could get going here. I don't think it's, I wouldn't bet much on it at this point at the high of the day, but Friday into the first week of January, this could be pretty explosive. Volume looks good. That looks like institutions. MACD stochastic, RSI rising. Everything looks good for a follow through.
Cash move to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market.
Okay, AMCI looking good. Looking good. Robotics.
The checking account built for investors.
AMCI. Robotics. Some decent amount of volumes coming in here. Okay.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Volume starting to pick up on AMCI Robotics. Okay, can we see 15 again? Probably. All right. S&P continues to climb.
You're making a play in a risk-defined way here going into earnings. So that would be a downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand. Schwab Network.
Apple looks like it wants to go some more. Apple. Nike, nice bounce. Microsoft looking good. Tesla looking for the bounce in Tesla. Silver, I have the 60 strike on. Oh, yeah, here we go. S&P, big move here on S&P. Man, they're torturing. They're torturing Captain Condor.
I want to invest with a company that can help me give my family a happy financial future.
Oi. Holy smokes. Oh man, I never would have imagined this. Okay, 69.30 is about as far as I think we can go here, but I didn't think we'd get past 69.20. I thought we would test it, but okay. Yeah, 69.20s. Going to take some of these off. All right, that's a nice day for. It didn't move as much. Didn't move as much as regular day, 6.5 hour trading day options for whatever reason. We got another pop. Be nice. Wow, they're just going to run this higher, huh? Fair value gapped. A lot of money coming in here. A lot of volume. Look at that volume. SPX volume.
Trading up 0.2% at 69.2355. The Nasdaq just marginally unchanged, but still in the green, 25,604. On the Dow, we're 0.4 higher, 48,646, and the Russell 2000 trading up more than 0.1% right now, 25.44. The 10-year slightly lower at 4.16 this morning. The dollar unchanged, 97.64. For gold, we are slightly off those highs we hit yesterday, down 0.5%.
Riot turning back up. Bitcoin. Do we get anything going on Bitcoin? Hard to say. Bitcoin, not my favorite idea at the moment. Maybe next year. Okay.
Welcome in Kevin Green, our senior markets correspondent here on Schwab Network, to talk about KB Homes. Now, KB Homes got a downgrade from Raymond James today, but not showing up in their price action today. You walk us through the note.
Yeah, you are seeing some buyers actually stepping in and trying to buy this dip here. We did see KB Homes report earnings, and it did disappoint the street on multiple fronts here. We saw the stock drop about 12.5 to almost 13% to the downside, but we are seeing it consolidate here. And we do have Raymond James downgrading the stock here to market performance.
Hedge flows still rising. Hedge flows. That's crazy. Hedge flows still. We're starting to get into the red zone. So this could get really volatile back and forth, not just straight up, but also pulling back pretty quickly back to 69.20. Very possible. Palantir trying to break out again. Palantir. Top 10 on the NASDAQ 100. Micron, Costco, Pinduoduo, Workday, Biogen, Lam Research, Vertex, Comcast Cable, CDW, and Apple. Charter Communications, ADP, Paychex, Gilead, T-Mobile, Dexcom, Trade Desk, Fortinet, Analog Devices, Old Dominion Freight, rounding out the top 20. A lot of good-looking stocks here. Apple still pushing. I took some Apple off that I bought yesterday. Microsoft, I still have a position in Microsoft. 490s and 500s. Calls for January. Netflix turning. Broadcom.
KB Homes saw a significant drop-off after they reported their earnings here, much like many of the other home builders that we saw. But they did have stronger than expected deliveries. I remember that being one bright spot. I think you were actually on air covering it with us when we were talking about KB Homes. Was there any mention of any of the potential positives for KB Homes, or was the note itself just inherently...
MACD's turning down. Look how far we are from VWAP. Look at VWAP down here. That's crazy.
the street's expectations, because a year ago we did see orders kind of ramping to the upside, and the concern is that over the next 2 to 3 quarters, because those backlog of orders are actually decelerating, that the delivery number is also going to be decelerating. And the only way for a lot of these home builders to try to get rid of inventory is to try to buy down the rates if they do have a financing arm, or provide other incentives, which eats into margin. So it's a little bit of a double-edged sword here. So you're right, deliveries were great, but if you're kind of looking at that backlog of orders, that's really showing you what the future revenue can be for this company. And we are also seeing, from an industry standpoint, a higher percentage of cancellations for purchases, not only for existing homes, but also for new homes, which could also impact the industry as well as the stock.
KG, we appreciate you being with us to break down that note. KB Homes trading about 0.75% higher this morning, despite that downgrade. That's Kevin Green, our senior markets correspondent here. I do want to talk more broadly, though, get some insight on news that's shaped the markets this year. Take a look at perhaps what we can expect in 2026. For that, we'll welcome in Pete Najarian, the co-owner of Market Rebellion. Pete, great to have you back with us on the show. Let's talk about this rally. You sent over a couple notes in advance of our chat, and you referred to it as one of the most hated rallies you've ever seen. Why do you feel that way?
I've been doing this since 1992, 1993. I think I started as a trader on the.
Okay, those call flies are now 425. Maybe consider take some of these off. And at 125.
Many of the folks that are voices on television and radio and everything else, and they were so negative, and I didn't see the negativity. It didn't make sense to me. It seemed to me that it was so hated that it was actually going to cause this thing to make the kind of a move.
Okay, the call flies are now 425.
It has not been a perfect line from bottom left to the upper right, but there's been some pullbacks there. That's exactly what a healthy market oftentimes does, as well as I like seeing when markets don't always have the same leadership. It's not always been technology. Technology certainly had a huge influence.
Okay, S&P back up here. S&P is still going. All right, those call flies, consider taking some of those off. Okay.
This has been driven by the full market and just each category of sectors taking their next moment to be able to pull up the markets. And I think it's been very healthy. When I see that, I like what I see, and it's given me the opportunity to kind of lean into it with a much more of a bullish stance.
And along with that hatred also came a lot of fear. We often have these conversations about markets being afraid or markets being overly cautious.
Wow.
Despite that, we didn't see risk appetite disappear. What signals are you watching as we head into 26 that's telling you, if at all, that investors are still willing to take on risk?
Yeah, just watching what we're seeing, especially with the unusual option activity that we see in the options space, where despite what we hear or watch on television, we're just going off of where's the money flows going to. And I'll tell you, on a very consistent basis, whether it's the S&P itself through the spiders, or it could be the individual names, and these are some monster individual names out there, including some of the areas where people are just, I don't want to say that they're hiding, but they're a part of this whole thing. When you look at gold, you look at silver, absolutely unbelievable performance, especially from silver. Silver has doubled the move that gold has moved, and we've seen options just giving us all of these hints that.
All right, Apple's still going. All right, this is going to be one of those days. Looks like this is going to be one of the shit. Look at this. Look at this. Oh my goodness. Wow. Oh boy. Here we go. Here we go. Yikes. Yikes.
Side of the story as well. The fact that the implied volatilities of stocks along with the VIX itself have been coming down. I think that's been a very big positive for all of us.
And let's talk about metals quickly. We had 2 consecutive back-to-back days of record highs for both silver and gold. I'd love to know your
Look at this. Look at this market. This is crazy. Oh, happy Christmas. Happy Christmas. Oh, Lord have mercy. Look at this market. People are chasing the calls right now. Whoa.
Some of the options that we are seeing that are being bought out into the future. But the GLD itself, boy, we've seen just in week we've seen some monstrous trades, spread trades. So they're actually, trying to take away some of the risk that they've got on. But we're talking $15 and $20 spreads, 113,000 options being traded in a couple of those spreads. It shows you that there's still an appetite, I think, right now for both silver and gold. Silver's been incredible. At some point, I think we're going to have to see some sort of pullbacks, and this will affect a lot of what's going on in the rest of the markets, because silver does actually, a big piece of what silver is part of the world of the markets that we talk about day in and day out, semiconductors and so forth. It's something that demand is actually going to be a negative effect, I think, on some of these companies, because of the fact that silver has made the run that it has.
Yeah, silver an important part of the industrial
Oh, Lord.
as well, of course.
69.20s.
You just mentioned that it may
Wow.
affect the market too. What's your equities outlook for 2026?
There's certain areas that I absolutely love.
69.20s.
And we've just watched this growth that we have seen across the board, whether it's Goldman Sachs or JP Morgan. You just see some of these, Morgan Stanley. But I'll tell you what, the investment banks are the ones that I like.
680.
Look at somebody like Citi.
Oh, Lord. How far are they going to push this? They're going to go for 7,000? I told you, if we were able to get above this red zone, fast move. Look for a fast move.
I think Citi has the best legs here for the future of 2026. Now, will it last for the entire year? I can't make that call, but I can tell you that I think going into the earnings cycle as we get into January and the first quarter, I think Citigroup is one of those that's going to continue to be just absolutely spectacular, just because of the fact that we still have M&A.
Oh, Lord.
We still have a lot of different things.
This is looking good.
For those financials, especially investment banks, that I think is going to power it forward.
And Citi certainly had a strong year so far, up about 74% in 2025. Now, big tech, what's your outlook on big tech? And do you have a favorite name here for 26?
Oh, I absolutely do. I look at Google and I see so many things. When we got the earnings recently, they were absolutely spectacular. I think people were blown away, and if they weren't, they're crazy, because they should have been blown away by the numbers. And even the fact that you've got double-digit growth still in search is absolutely incredible. And what they've been able to do in other areas of the market as well. I mean, it's just the growth in search, I think, does stand out. I look at the cloud growth as well, which is up 34%. I think Google has got it all going on. I think it's very, very special. It took them a long time on the
Okay, Oracle coming back from the highs. Oracle.
to make a pretty substantial move in AI over OpenAI as well. So I think they're really sitting in a great spot. And I know that this has been a great year for Google. I just don't think it's over. I think there's still plenty of room in 2026.
They certainly made their way to the top of the Mag 7 in a quick and impressive fashion here. But you're not the first person that's expressed that sentiment about Alphabet either. Let's talk about industrials. We were talking about silver and its importance as an industrial metal, but that space is one that keeps getting highlighted as a potential one to watch. Do you like anyone in industrials?
Yeah, I really do. And it's funny because Caterpillar is one of my favorites, I think, right now. And why is that? Well, because the effects that AI, what does AI need? Well, they need a lot of heavy machinery. They need a lot of build out. They need a lot of generators. Well, who are they going to go to for that? Caterpillar. And I think that when you look at this stock and the performance it's had in 2025, it's only going to go higher. This isn't over yet. There's still a lot of the build out side of it. And that's where I think Caterpillar really shines. So despite the fact that
look at this move. Holy smokes.
I think this is another 2026 story that can add on to where we are right now. Yes, the PE is a little stretched, but is it stretched, or when we get the next earnings, are we going to elevate that even more?
Congratulations if you took those 69.20s or whatever today. Wow. AMCI continuation looking good there, Frano. AMCI. Okay. AMCI. Nice move here. Lockheed Martin looking good. Okay, Lockheed looking for that to continue over the next few weeks. Lockheed building the right side of this pattern. Lockheed, S&P. Wow. That's people getting destroyed. that sold those condors. Holy Toledo. Wow. Speechless. Speechless in Seattle. Oh boy. Very nice. Very nice.
This is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange. The countdown, the setups, the stories that make markets move. Minute by minute breakdown of the biggest headlines, earnings, and global movers. Just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please. But there's a Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we? No can do.
I'll get out there.
All right, speechless
Where
here.
are you going?
Schwab. Schwab.
Okay, let's see what Trace is telling us. All right, so we're at the highs. Okay. Hi, Marley Caden.
We've got 3 stocks, 3 charts, and 3 trades. Rick Ducat, of course, joining us to take us through the charts. Here to take us through his trades is Don Kaufman, the co-founder of Theo Trade. Don, great to have you with us. I know last we spoke, you said no Santa rally. Santa comes tomorrow. I'm seeing green on the board. I'd love to get your thoughts on if you're still holding strong that there will be no Santa rally.
Oh, this is mild drifting, if you will, to the upside. And yeah, markets were already at or near all-time highs, but again, I wouldn't read into some of the price action here too deeply. Throughout the course of this week, given the fact that the S&Ps are incredibly light volume. So nevertheless, right now, though, we are squeezing just a little bit higher. It's okay. As I said, it's rather light volume, but hey, look, we're printing these prices and we're likely to print, if you will, an all-time high, but we've been within a stone's throw of that for a considerable period of time. Tech, though, is not the primary driver in this most recent move to the upside.
It certainly is not, but you do have a tech name to kick off Big Three today, or I guess you could argue a tech name here, a big tech name. We've got Tesla here coming off of their all-time highs. They've had some very favorable news and
Okay,
to close out the year.
take some profits.
Yeah, so, well, here it is. You guys wanted me to talk a little bit about some of the trades, some of the good trades I've had in 2025. First, I have to throw out the disclaimer is, as a trader, I have to tell you, I am not ever geared to want to talk about good trades I've had in the previous year. It's like a bad thing to do in trader. Nevertheless, Tesla. So I have been very bullish on Tesla.
Okay, a little profit taking. All right, so good area to take some profits off the table. Good job.
Some of the chaos surrounding Elon Musk. And for the most part, from $300 kind of on up, I'll just round it. It was the right in that neighborhood where I started to actually take a bunch of bullish call spreads. Look, this didn't have to do with the business model. It didn't have to do with the vehicle sales. It didn't have to do with forthcoming products. It just simply had to do with overall sentiment against Elon Musk, which eventually would fade. And it did fade exactly like that. And again, we were able to take a number of bullish call spreads throughout the course of 2025, riding Tesla nicely to the upside. I mean, look, I don't mind saying I caught it to the downside a couple of times too when the stock was,
Wow, this is
overbought. But here we are.
one for the record books. I've never seen, and I trust nobody else has seen anything as large as a 90,000 contract 0-day iron condor. on the S&P since 0 day has only been a few years, right? That we've been doing this. 90,000 contracts, $33 million. That's crazy. And it looks like they're going to go some more. Wow.
Rick, as we look at Tesla, you can see some of these volatile movements that Dom was just highlighting, that it did have a lot of erratic moves. But in the last several months, we have seen this really aggressive move to the upside.
Right, just for perspective, here was our old all-time highs. This was our tariff news shock event about 9 months ago. Those lows near, 200 or so. And then a very swift move back to the upside. Now we once again sit at those previous all-time highs. We did make some intraday highs beyond that point. Actually, one high closed, too. So the level here near about 482 or so, 489, that would be an important upside area to reach. 498.83 is the actual highs, though.
All right, new highs here.
That the blue trend line has changed into a much steeper, much tighter white channel here, so we can kind of fit our boundaries between these two parallel lines here, potentially moving toward outside of the channel here today, but we'll have to see. It's as Don said, it's kind of a light day. It's kind of a weird time for the end of the holiday season here. But a push above resistance could result in a more energetic breakout as we cross above those all-time highs. For now, price sits near its weekly 5-day EMA here. Our monthly 21-day EMA comes in near 461. RSI. Showing a little bit of bearish.
Okay, so I don't want to get so mesmerized by the S&P 500 that I forget to take some things off here. Let's see.
Heading into this final full trading week of this year, and when we look here at our volume profile study, 420 to 440 is the heavy volume area.
AMCI looking good.
Prices, so that could be a key area to watch going forward.
Yeah, and Tesla just in the last 6 months up 41%. So there's that impressive move that we've seen to the upside. Now this next one, I'd love to know where you stand on this one. Lululemon, pretty beaten down.
AMCI looks good, Prano. Okay.
A lot of competition in this space. Walk us through this one.
That's a big portion of it. So throughout the course of this past year, I have been very vocal about being bearish on Lululemon. So look, I know a lot of people come on here, give me some of the best trades in 2025. I'm actually going to give you a bearish trade in 2025 that's worked out incredibly well. Again, I've been kind of riding this one to the downside with a considerable number of trades throughout a large portion of the year. Most of the downside that I caught inside of Lululemon is 350 and below. You can see a few peaks, a few valleys.
Okay, I got a little less than 2 hours to go. We close at 1 p.m. So keep that in mind if you're chasing anything or considering taking some profits off. Just call it a day. Enjoy yourself. Get ready for tomorrow if you celebrate Christmas. I got to run to the bank right after we close. Hard stop at 1 o'clock. So I'll do my Merry Christmases and such before they close. All right, the futures are still going here. Wow. Wow, wow, wow.
Again, that market share is being eaten. You even got NFL athletes right now that are working specifically with Alo.
Okay, NYMO. Where's NYMO? NYMO's at 13. It was started off the day at 4. NYMO at 13. So breadth is improving a bit.
Yeah, year to date on Lulu, they're down about 45%. So Rick, as we look at the technicals, what's the technical setup showing us as we head into 26?
Certainly a difficult chart for the bulls, as you all said. We can see that more recently, though, the horizontal levels are what really stand out because here, near 159, this is where we formed a consistent point. Near 159.25 was our actual intraday lows.
We're going to go off the screen here. Looks like it. Oracle looks good. Palantir looks good.
208. And then we also had this low point after our gap near 198 here. So to give you some more very tight specific ranges here, that's around where you might be looking because that is where we've had our lows most recently after struggling to break above that 208 point initially here. But for now, we are out of our channel type shape to the upside here, but still sitting on the supportive area after earnings, after we did have some upside movement here that has not really transitioned into a new trend.
Disney.
We are between our
Disney.
EMA, our weekly EMA, which is our shortest.
What do I want to do with Disney? I might cut down my size, actually, instead of add to it. I don't know. This is looking very strong, right? Disney, MACD, stochastics. Stochastics embedded, MACD bullish, RSI rising. Not quite to 70 yet, so I'm thinking, you know what? Let's hold on to 116. I'll reconsider an exit at 116. Disney.
Very heavy trading at a significant low is often viewed as a sign of strong support here. Also, right here, more volume near 200. So two very heavy volume nodes to the downside to watch for potential support. To the upside, things start to pick up here on a much smaller scale near 230.
All right, and you know, Lululemon, obviously competition, a big player here down here in the last year, 45%, so just a little bit better. But this next one, we were just talking to Pete Najarian about silver as well, and he did throw out SLV here too. He's bullish on it. How do you stand, Don?
So, all right, backward looking, you want to go back into, early 2025? Absolutely.
This guy is always short.
No, I'm actually bearish. I'm bearish in here. This is taking on a whole new theme.
He's always bearish. What are you talking about?
Start with the logic of, you better be defined risk in here. I would use option spreads all day, every day in here. I'm not touching SLV ETF shares at this point, long or short. The risk is, I mean, you can taste it, you can touch it, you can smell it.
Yeah, I'm short. I'm short silver at this point. I got the 60 strike.
SLV is record breaking. You haven't seen implied volatility inside of SLV like this outside of crisis. We're talking, if you will, the COVID crash in 2020 was one of the last times that implied volatility inside of SLV has actually been this high. Before that, you got to go back into 2011, 12, and 13 when we were in operation.
Okay, let me gotta plug my phone in. Excuse me 1 minute. All right, somehow I hit the mute button there. Okay.
All right, and Ollie, coming over to you, and no pressure on how much I liked that Marley Christmas comment to either of you. That was great. You just mentioned the CapEx.
Oh, that's funny.
But they had strong ad performance this year, solid top line growth in 25, but we're still focused on this massive CapEx spend. Do you think that Meta spent too much too soon in 2025?
Yeah, in our opinion, yes, they did spend too much too soon. Obviously, the ROI remains to be seen, but I mean, it's not just this year north of that 70 billion that was just discussed, but it's also next year. You know, some analysts have it estimated at above 100 billion, and you've got that free cash flow getting cut in more than half. I think reduced by around 60% next year. So.
All right, so Meta. All right, so I'm just sitting here. I'm mesmerized by price action, but I gotta be taking some things off too. So let me focus back on what we're doing here. I haven't really done much. I was gonna add to Disney, but I decided to wait until it gets to 116, make a decision there. Palantir's just flat, so I won't do anything there. Lockheed Martin, the aerospace and defense stocks are on the move. What do I want to do with Lockheed? Lockheed Martin. Okay, that's not quite what I wanted to see, but it is building the right side of the pattern, just getting started. I told you about my son's position in Raytheon. He bought this several weeks ago on this big red candle. Had to endure a little bit of pain on that dip, but it hammered by the end of the day and then moved back above the 50 days. So this is Raytheon, another aerospace and defense stock. Northrop Grumman, also somewhat bullish. So what do I want to do with Lockheed? Do I want to sell some of this?
At what point do you think that becomes a valuation problem? And how much free cash flow erosion do you think investors will tolerate in the name of being a long-term AI leader?
Yeah. Okay, we got a little bit more than an hour and 7 minutes to go. I'm your host, Cousin Benny, coming to you from closingprint.com. Wednesday, Christmas Eve, 11:53 a.m., December 24th. Very nice trade on S&P. All right, so profit taking now. Profit taking on S&P.
So yeah, the kind of free cash flow diminishment that can happen. I think that 2026 is the year of reckoning. People are going to follow those numbers closely. By the period of next year, I would say people are going to start making some serious adjustments in their portfolios if they're not seeing real ROI from AI, at least from Meta.
Yeah, it certainly is going to be a metric I think people are keeping a close eye on when it comes to these big names. And Ollie, there has been, we talk about CapEx, but there's also become a lot more mention of this concept of the incognito CapEx, this off-balance sheet spend.
You got some bad oysters there, Mondo? Yeah, I haven't had any raw oysters in ages. Probably last year. Actually, summertime. Yeah, we had some summertime.
Wait to see some ROI on all of that investment. But yes, you're right on that SPV. That, I mean, 27 billion. I think it's, as you mentioned, the Hyperion data center. So that's an off-balance sheet, and it's one can view it as the company basically trying to make its balance sheet look as clean as possible. Another can be they're basically passing the risk down to someone else. As you know, Blue Owl Capital is involved in that. But I would say it remains to be seen. I mean, again, uncertainty is surrounding this. And just on Meta specifically, I would say that it's not necessarily, I don't think it should be viewed the same as, let's say, an Alphabet. So, Alphabet has the entire full stack, and Alphabet can actually monetize its own technology very effectively, in addition to becoming more productive and operating more efficiently, as we've seen Meta do. So that's a big difference. And the effectiveness on the Alphabet side is obviously, the the more efficient, less power needing TPUs that these guys are using more, and just how well they've improved on the Gemini 3 front. So I would view, for example, Alphabet very differently.
Okay.
And just one more thing I wanted to say. We did start trimming. We don't currently
S&P more profit taking, leading to a little bit more buying now. Jeez, they're relentless today. All-time highs. There's nobody up here to sell to you. When you think about it, S&P.
Taking a look now, talking about, you mentioned Gemini there and the competition in these large language models. Dave, coming over to you, Meta was once viewed as the clear leader in this space in terms of open source AI with Llama, but we've seen this competition.
Yeah, there's no one to sell to you up here. All-time highs. There's no one ever bought up here.
And also, does open still matter in terms of a strategic strategy if monetization there isn't immediate?
Yeah, I don't think so. I would echo the comments.
Yeah, exactly, Frano. Yeah. So, call flies. 12:31. I'm all out, folks.
On behalf of Google Cloud specifically and Alphabet. So no, that whole idea of having the complete stack, it puts Meta in a completely different category than someone like Alphabet. The one thing they do have is this idea of an AI interface, and they own all of this data because they know all of these things about us. So will Meta glasses
Call flies. I'm all out now.
I think Meta finds itself in a
This run-up gave you a perfect opportunity. Got near, I don't think we'll get to 69.50, but close enough for hand grenades and horseshoes.
alliances on one side, and the Oracles and the Alphabets and Google Clouds on the other.
And Ali, you've both been making clear that 2026 is the year that Meta has to.
Oh, there's quite a bit of open interest up here too at 69.50.
I would say on the CapEx front,
69.50.
And hopefully, maybe a slowdown on the hiring side. I mean, this is truly an arms race, and it looks like Meta has been really the most aggressive on the hiring front, on the CapEx front. So we do need to see additional return on investment. That's pretty much it. Let's hope that can be actually accommodated by maybe possibly a slowdown or a deceleration.
They're 4.55 now.
That we've seen the last 2 years, year and a half, 2 years. So that's what we're looking for. But it requires a lot of patience if you're in that name.
Right, Meta this year performing about 14% higher, right in the middle of that Mag 7 pack. But I want to thank both of you for being with us today to highlight Meta's 2025 and also take a preview for 2026. And I'm going to steal Dave's phrase and wish both of you a Marley Christmas because it's my new favorite holiday greeting.
Merry Christmas to you.
Thank you. And thanks to Dave Nicholson, Chief Research Officer at Futurum, and Ali Maghrabi, the Senior Equity Analyst at West End Capital Management. I also want to thank all of you for joining us today on Trading 360. I'm Marley Caden. You can download our free Schwab Network app available in the Apple App Store, and you can tune in 24/7 on schwabnetwork.com. To all of you who celebrate, Merry Christmas to you and Happy Holidays. Stay with us. Fast Market with Diane King Hall is coming up next.
Can we get to 450 by 12:31? I don't know. My intent wasn't to try to get the maximum profit because I didn't think we'd get to 69.75. 69.50 seems a lot more doable now. But 69.75, 7,000, it just seems like a pipe dream. So I took the rest of these off. I'm out. I got about 430, 435 average on the last one. So that looks good.
Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on ETF.
Follow the biggest headlines.
Okay, what else do I want to do here? Lockheed, Northrop. I might take some Lockheed off, actually. Reduce my exposure, maybe roll some out a little bit further out in time. Maybe wait until I was going to say next week, maybe Friday. Friday.
Actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand. Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Hey, Bob. Hey, Andrew. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable. Wait, had a stroke? Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad?
Oracle's still pushing. Okay, what else do I want to do? We got an hour, less than an hour to go. Let me just shift gears here and see what Wapner is. Wapner on today?
Say something. This Santa rally, is it a thing like a fake virtual thing, or is there a fundamental thing behind it?
I think there's actual real stats behind it. The Stock Traders Almanac Hirschfield guys actually shown that this is a good period between basically the 1 week before the end of the year and the first few days.
But why is it? In other words, I always thought like people around this time are maybe selling stocks to give money to charity, pay bills, those sort of things. I would think there would be downward pressure on the stock market at the end of the year. And by the way, especially on a good year, trying to lock in gains so it's in the calendar for the records.
Yeah, I mean, I could say that I can see window dressing playing a role into year end. Professional money managers want their winners to look good, so they bid them up into the end of the year. And then the first part of the new year, I think, makes sense because that's when people allocate into asset classes. So there's money going into stocks in the beginning of the year.
That's the first couple parts here. I'm an anti-technical person, Kelly.
You don't like the chart stuff.
I don't like the chart stuff. I'm a fundamental guy, and I want to know if there's fundamental stuff. That was the thing. Tom, let's talk about which areas you think for the new year might be areas that are not well covered, and maybe ones that are a little off the radar. The sort of, I don't know, the headwind, the tailwind, tail risk things that are out there right now.
Yes, I think in 2026, there's going to be likely a more dovish Fed. And that dovish Fed will allow business confidence to recover. So the ISM, I think, recovers back above 50. And that's going to be a tailwind for traditional sectors like industrials, energy, and basic materials. So I think those are sort of three groups that should do better in 2026 than 2025. But then there's also, I think, some tailwinds building for the financial services, which you guys mentioned are doing well, which is that financial services companies are really big beneficiaries of AI, and they're big beneficiaries of using blockchain.
Oh, they close at 1 o'clock today. Unfortunately, I'm going to have to run over and go to the bank real quick. They're going to close at 1, so I need to run in there. I'll be back hopefully before 1 o'clock, folks. I have to jump off. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's Wednesday, December 24th. I need to run to the bank. I didn't realize they closed at 1. I thought maybe they'd close a little bit later. So I'll be right back.
Well, that would be
So before we get to 2026, Joseph, obviously you want to talk about your outlook here. Let's just take a beat on 2025. What do you make of the year, Joseph? What did you learn?
Well, it was another great year. Averages now had 3 fantastic years in a row. I think that obviously the prevalence of AI, not just of the AI beneficiaries, but the spread of the impact has been enormous across the markets, and clearly that's been the dominant theme. Who are the winners? Who are the losers? Losers have obviously had a very tough year, and the winners have been fantastic stocks.
thoughts ahead here. With the SPX, if you look under the hood, it sounds like, Joseph, you're bullish on the 493 instead of just focusing on the Mag 7. Let's start there. Explain that. I mean, is that valuation, Joseph? Is it earnings growth, positioning? Explain it.
I think that there have been a number of businesses in the Magnificent 493 that are perceived as being hurt or compromised by the growth of AI. Valuations have gone significantly lower for a number of those companies, and businesses that are just not participants in the opportunity of AI have also not performed particularly well in that bucket of the Magnificent 493. And I think in 2026, what we're going to find is that many of these companies are harnessing AI to get better, to lower their costs, to improve the velocity of introducing new products. And those businesses will begin to get the benefits of that as people recognize it. It hasn't happened in the last couple of years, but I think we're going to notice that in the next couple of years.
Well, what does that suggest, Joseph, about what do you think I do with the Mag 7 though in 2026? Am I avoiding those names? Am I trimming exposure? Do I have to be more discerning? Maybe next year, Joseph, it's more like, the Mag 3 or 4.
I think so. I think the Mag 7, it's tough to paint them with a broad brush because each one of them has a specific story associated with them. But I think just from a valuation perspective and the fact that they perform so well for such a long period of time, I think that some of them will take a break, some of them will perform well, but really the opportunities for outsized returns next year are going to be outside of those 7 businesses.
There was a story out there, Joseph, sort of a narrative that it told that, when the AI trade better stay intact. If it doesn't, the market's going to come off its wheels. But having said that, recently you can look at some poster child for the AI trade. I think of an AI heavy name like NVIDIA. It's well off its 52-week high, Joseph, but this market has continued to grind higher. I'm just curious what you make of that.
Well, I think that it bolsters the thesis that the 493 certainly have legs. And I think more broadly, the economy is stronger than people thought it would be when we started the year. Rates are probably lower than where we thought they would be. Inflation is probably a tick lower than we thought it would be. So the underlying conditions are somewhat better for the broad market, and the broad market has been able to weather, as you talked about, the bumps in the road that are inevitable with regard to the Mag 7 and the AI trade. So I think it's positive for the index as we enter 2026 that we've seen some level of broadening. And obviously, we see opportunities in the defense sector, in healthcare, and selectively in technology as well as this rally continues to broaden.
Yeah, well, let's get to some of those specific names and picks, Joseph. You like Broadcom here, for example. How come? What do you like about CEO Hochdan's company specifically? Is it business model, margins, his AI story?
Well, our strategy is to invest in recurring revenue businesses, and Broadcom has one of the great technology recurring revenue businesses. When you think about how they're positioned with regard to AI, they're really very, very well positioned in a category where the product, the GPU, is 90% of the cost of the solution. And Broadcom, with their XPUs, is dramatically reducing the cost of effectuating the outcome that AI provides. And so we think that they'll continue to take market share among the hyperscalers, which is going to drive fantastic revenue growth in the AI business. We see the AI business doubling in 2026 for Broadcom, and we see it growing very, very rapidly after 2026. So long term, they're very, very well positioned with a product that is highly efficient for the customers.
And Joseph, you also mentioned you like healthcare. At a high level, what do you like about that sector? And what, in your opinion, is a smart way to play it?
Look, healthcare has been out of favor for the last 3 or 4 years. Healthcare spending peaked in the pandemic, and a lot of demand was pulled forward for the businesses that we like. And those businesses tend to be the recurring revenue tools providers to the healthcare industry. Think of Thermo Fisher, think of Agilent, Mettler-Toledo, provider of products into medical labs. And so those businesses are beginning to see better demand, and it's slowly getting better for those companies. And generally speaking, when things get better in healthcare, they stay better for a long period of time. So we see a very long-term growth opportunity among most of the healthcare industry, but particularly in the medical tool space.
And finally, Joseph, you mentioned you like defense. Now, President Trump, you saw this. He's been making some headlines there saying he wants these companies focused more on spending on new plants, not buybacks. Walk me through why you like defense, Joseph, and what, in your opinion, are some smart ways to invest in that sector.
Well, the big picture trend in defense is that European NATO spend has to go, basically is going to triple over the next 10 years. And so we're thinking about which businesses are going to benefit from that multi-year trend of growth in that end market. And so what we like are the recurring revenue aftermarket providers of parts in the defense industry. So we own HEICO, we own General Electric, and TransDigm, and all of them will be benefiting. All of them have about 40% of their revenues tied to the end market. All of them have very, very strong recurring revenue business models, and they're very well positioned for a number of years to benefit from that. What we think is a very long-term and durable trend.
Joseph, great to have you on the show today. Happy holidays.
Happy holidays.
Coming up, 2026 could be a blockbuster for the IPO market. Plenty of uncertainty remains. You've got to look at the key IPOs to watch, and they may not be the names you're thinking of.
Cleaning is a stressful chore. You can scrub by hand all day. There has to be a better way. Now there is with the Spinny Scrub, the revolutionary handheld spinning scrub brush that makes cleaning a snap. Make pots and pans shine. Deep clean your grout and tile. Even filthy shoes look like new. The Spinny Scrub is easy to recharge and store away. And with detachable cleaning heads, you can relax and let the Spinny Scrub do all the work. Scan the code on your screen and order your Spinny Scrub today.
Why did our ancestors use copper for centuries? Because they knew. Why do the best athletes continue to wear copper? Because they know. Hospitals know, which is why they insist on copper. Scan the code on your screen to get 50% off with this exclusive TV offer. And get Copper Smart, the ultimate accessory with a purpose. Titanium, stronger than steel, lighter than aluminum, trusted in aerospace. And now, redefining the way we prepare for kill. Resists corrosion, never absorbs odors, and remains flawlessly food safe without ever breaking down into harmful microplastics. Titanium Edge, now available through this exclusive television offer.
TMC. UANY. SITU. TMC. SITU.
Building relationships is at the heart of what I do. Adobe Acrobat AI Assistant helps save me time, but also build trust with clients. Getting through contracts as quickly as I can break a deal With AI Assistant, I can find contract details quickly, and it provides prompts for questions that I didn't even think to ask. Having all of this together really helps position myself as an expert, and it gives me that confidence to talk to clients.
Do you want free internet forever? You got it. Really. We mean it. Spectrum is offering free fiber-powered internet forever. Want it? Just call this number and switch 4 mobile lines to Spectrum for a lifetime of internet you never pay for. It's not a trial. It's an unprecedented offer. So we'll say it again. Free fiber-powered internet forever. Have you called yet? Because your internet is forever. This ad ends now.
That time, some of today's trending tickers. We're going to start here with tech. Intel is under pressure thanks to NVIDIA. Reports saying NVIDIA is not moving ahead with plans to use Intel's chip production process. According to Reuters, NVIDIA recently tested the so-called 18A process. This highlights a pain point for Intel amid its struggling manufacturing business. NVIDIA, remember, earlier this year invested $5 billion in Intel, but did not commit to using its chip manufacturing services. Up next, take a look at Tesla as the company faces a new investigation. The National Highway Traffic Safety Administration is launching a probe into the EV maker's Model 3 compact sedans. This comes amid concerns that emergency door release controls may not be easily accessible or clearly identifiable. The focus of this investigation is on model year 2022 electric vehicles. U.S. auto safety regulator has also been looking into Tesla's advanced driver assistance system over alleged violations of traffic safety laws. And lastly, let's take a check here on crypto. Bitcoin continues to slip, missing out on the broader seasonal optimism. The world's largest cryptocurrency stalling here between 85,000 to 90,000 range. A slump in the digital asset follows a turbulent couple of months as crypto struggles to regain its footing after falling sharply from its record high back in early October. Well, 2026 could be the year of the initial public offering. Late Thursday, Motive, a company backed by Google, filed to go public next year. That company is currently valued at nearly $2 billion. That's according to Yahoo Finance private market data. And with all the talk of OpenAI and SpaceX going public, it could be a blockbuster year. Joining me now, we've got Greg Martin, Rainmaker Securities Managing Director. Greg, it is always great to see you. So you know here, Greg, it was a choppy 2025, you say, for the IPO market. Highlight tariffs, rate uncertainty, the government shutdown, of course. So what do we expect looking ahead, Greg? What's going to happen in 2026 that gives you cautious optimism here?
Well, Josh, good to see you again, and thanks for having me. You know, I mean, we thought 2025 was going to be a big reopening of the IPO market. And as you point out, there are some issues, tariffs, rate uncertainty, but I think that is behind us largely. Obviously, we're seeing a very good GDP print coming. Inflation's lower. We're now officially in a rate decline, an interest rate declining market. And of course, markets are at all-time highs. And we still have this amazing backlog of really solid private companies, many, even centacorns, if you will, $100 billion market cap companies, any one of which, if they went public, would actually dwarf the total amount of proceeds raised, at the end of 2025. So I think there's a lot of really good elements. The VIX is low right now. So again, there's always risk. There's always things that could pop up. We could have some unusual geopolitical events like we did in 2025. But I think the market right now is set up for a really big 2026 IPO, and the pipeline is so good that it wouldn't be a surprise if we just got back to something closer to 2021 levels.
If you were to rank, Greg, the catalyst for IPO issuance next year, can we rank like what matters most, Greg? Is it rates? Is it stock market stability? Is it a few headline making big names testing the public market successfully? Like, how would you rank these?
There's a little bit of all of the above. I think stability is usually the most important. I think when you think about a new issuance, there's inherent risk in any new issuance because the company hasn't been public before. So it's testing the market for the first time. So I think stable equity markets is usually number one for me. So I like to follow the VIX when the VIX is low, which like it is now. That gives me more comfort. Obviously, when you're in a declining interest rate environment, people are going to cycle over to equity. That's usually a positive. But clearly people are going to watch the success of new IPOs. So I think when an IPO performs well, that will usher in new IPOs because people are going to want to access the market because they see a receptive demand for their IPO. So they're all important, but I think the number one most important thing for me is just a stable equity market.
So we talked about reasons for optimism next year, Greg, right? What are some risks that we need to think about? What are some, potentially negative factors that would be on your radar?
Yeah, I mean, we still have a volatile government situation. We're still worried about another government shutdown. Obviously, we thought the IPO market was going to reopen kind of after Labor Day, and then of course we had the government shutdown, and nothing was going public. The SEC was shut down, so we definitely have to watch the government, whether it's open and open for business. There's obviously geopolitical events that can happen that are sort of more macro in nature, and that's going to cause volatility. There is an issue where right now we have a market that's really buoyed by the interest in AI, and it's obviously really floating the equity market significantly. So I do think that you have to watch all of those potential risks. But right now everything feels fairly stable, and as I said before, if we see stability, if we see predictability, I think we're going to have a good market. We have to always be careful about those potential factors that could be negative.
You mentioned AI, Greg. Just to stop there for a beat. Perhaps some jitters there, at least in the public markets. I just looked, Greg, at like Nvidia off its 52-week high there, Broadcom off its 52-week high. But what are you seeing on the ground here? I mean, from you look at through a different kaleidoscope. I mean, is there just as much excitement about that AI trade and trend, Greg, as if I asked you, 6 months ago or 12 months ago?
Yeah, I mean, the AI trend is always a little precarious. Every quarter we sit and we watch with bated breath NVIDIA's earnings report, just to see if it's still going. NVIDIA's obviously, the benchmark for everything AI because everyone pretty much, a very high percentage of people are buying their chips to push AI. It's right now we're in the build phase of AI. I mean, it's still very early innings, and one of the things that will start to be measured is the ROI of AI applications. Are consumers, are businesses seeing return on investment of AI? Right now, they're buying it, they're experimenting with it, they're trying it. There's a lot of promise around AI, and so we're going to start to see whether the money is worth what they're actually getting in terms of increased productivity. So far, the returns are somewhat mixed, and I don't think we're going to know anytime soon as AI continues to improve. But the infrastructure side of the game, which starts with NVIDIA and then goes to GPU infrastructure companies like CoreWeave, which was still up 100% this year, even though it's been pretty volatile. There's a new company that will likely go public in 2026 called Lambda Labs. There's a company called Crusoe. So we're seeing it in the private markets. There's definitely been mostly upward pressure. We're seeing OpenAI talking about a $800 billion financing. We've seen Anthropic meteoric rise this year. XAI is raising money. So the infrastructure side has been very strong, but at some point the rubber's got to meet the road. People have to start seeing return on the investments they're making in AI, and that will be the biggest thing that will press it up or down. But I think it's too early to tell at this point.
You mentioned a couple there, Greg, but I'm just curious, what other names are on your radar? You think, okay, these are names that could be IPO ready in 2026.
Yeah, I think there's a fairly large list of big companies, that are kind of 10 billion market cap and up. There's companies that have talked about going public for a while, like Canva, which is a SaaS presentation company. There's a company, called Ramp, which is in kind of the expense and card management space. There's a company in the human resource software business called Rippling. There's a payroll company called Deal. There's messaging business, Discord, we've talked about for a long time. Motive, obviously, you mentioned, just filed to go public. And then, of course, there's the really big guys. There's the SpaceXs that have talked about maybe going public, sometime mid to late 2026. That would be potentially $1 trillion market cap, could be $100 billion, raise. There's OpenAI, I just mentioned. There's Databricks that have been talking about going public. They just raised a round valuing them at $130 billion. There's Stripe, that is always on the radar. I mean, these are companies that could go public at any time. And so I think there's the mega names that if they go public, are really going to create a groundswell. And then there's the smaller companies that I just mentioned. So there's a good long list. And that's just the tech sector. I'm not even covering, mostly some of the other sectors, but so there's a good long list of companies that could really create a groundswell of IPO interest this year.
Yeah, I want to end on that point, Greg, because I think it's interesting. Let's say you had a really high-profile mega name go public next year. I mean, let's say, Greg, it was SpaceX or Anthropic or OpenAI. I'm just curious, what kind of ripple effects could that really have on the broader IPO market? What can that mean, Greg, for IPO issuance or sentiment?
Yeah, well, when you're talking about a SpaceX or an OpenAI, you're talking about potentially raising $100 billion, which would be the largest IPOs in history. So you're really testing how much interest there is in new issuances there. So you're really, it's a real big test of the capital markets and whether a company like that can come public and raise that amount of capital. It just sort of goes to test how much money is really on the sidelines waiting for these companies. And we're in a market that's kind of dominated by the Mag 7. And so if you want growth, you're investing in those. And where most of the growth today is in the private markets. And so it's a real test of, when you can finally access these great private companies, how much are people willing to open up their wallets and invest in these businesses? We've seen, because of the scarcity of these companies in the private markets, their valuations have gone up significantly. But when they kind of come out, they got to present themselves publicly. It'll be really interesting to see just how big the universe of potential buyers are for these companies in the public markets.
Greg, always a pleasure to have you on the show, my friend.
THH may res in 10 seconds.
Merry Christmas. Have a great holiday.
Coming up, we're taking you into the trading pit. Jared Blickley, Kenny Polcari giving you the best investment moves to make it. 2025 comes to an end.
At Bar Physical Therapy, our goal is to get you back into activity faster. Whether you're recovering from surgery, dealing with a sports injury, or managing chronic pain, we're here to help. With personalized care and hands-on treatment, we work directly with you to reach your goals. Whether that's getting you back to your favorite activities or keeping up with your family. And now, with the new location in Roseville, expert care is closer than ever. Call today to get your complimentary screen at Bar Physical Therapy. Bar Physical Therapy, getting you back into the swing of things.
We all love recipes with garlic, but trying to use an awkward garlic press makes a smelly mess. Introducing the Great Garlic, your ultimate kitchen companion for effortlessly crushing garlic to perfection. Just place a peeled clove of garlic under the grate, rock it back and forth, and say goodbye to tedious chopping and messy mincing. The Great Garlic ensures consistent results every time. Scan the code on your screen to order your Great Garlic today. This is a limited time offer, so scan now and find out for yourself just how great the Great Garlic is. Stay tuned for a special free offer from Flash Force Tactical Flashlight. With its powerful telescopic zoom, the Flash Force Tactical Flashlight gives you a super bright light visible at a distance of over 2,000 meters. With 7 useful modes, plus a USB rechargeable battery, the Flash Force Tactical Flashlight is always ready to light up the night. And if you scan the code on your screen and order right now, we'll send you a second Flash Force Tactical Flashlight absolutely free. Hurry, this is a limited time offer. Scan the code on your screen to order now.
As much as we appreciate what our mechanics can do and who they are, no one looks forward to seeing the inside of an auto shop. Because if you're here, your car is too. And that means something's wrong. And likely, it means an expensive repair bill. That is, unless you call CarShield. When you call CarShield before your car breaks down, they have plans that cover up to 5,000 parts and systems of your car. Don't wait. Call CarShield today before it's too late.
Call 800-522-3614. Our story continues on the Mount Projects. With an express delivery of Walmart's last minute gifts.
Enjoy your macchiato! Express delivery as fast as ever.
Who knew?
Take the lunch! Bingo!
Thank you.
Wait! Can I close the garage?
Candy Crush has over 15,000 levels.
King Games has over 200 million players. Players have completed 5 trillion levels.
Candy Crush. Download now. The clock is counting down toward the end of 2025, and with just a few trade days left in the year, there's some money moves you may want to make. Jared Blittery and Kenny Volkari break it all down in this edition of the Trading MMC.
We got to get to what investors want to know about their portfolios, and I've got a nice little list here. Let's just briefly review tax loss harvesting. You can, if you have the security or a stock that you own right now, you can actually sell it, and then you can take that loss and possibly offset your tax bill for next year. But you got to be careful not to buy it back for 30 days. Any thoughts on that?
Right. So, well, it's something that, as a wealth manager, an asset manager, that's what you do, right? You should take advantage of it. So, individual investors should take a look at their portfolio, take advantage of any loss, and if you want to take a gain, you got to take this loss, write it off against the gain, and then reallocate some of that money into either a new sector or, like Jared said, you got to wait 31 days and then reinvest it if you like the name that you sold.
All right, now let's talk about rebalancing and reassessing portfolio risk, because that's what investors should be focused on right now.
Right. So you really have to take a look at the portfolio at the end. You have to see whether you're out of balance, right? In terms of have stocks gone up in value that they've now created a portfolio that's not in balance, or at least not in balance the way that you want it to be. So you should always look to fix that. Now, it doesn't mean you have to sell something. The way I do it is I add new money to the sectors that are now underweight, and I bring the whole thing back into balance again. So you can do it a couple of ways. That's just the way I do it.
All right, now let's talk about risk tolerance and time horizon, very key concepts that we talk about in trading and investing here. I know you spend a lot of time on this, so break it down for us.
So you really want to talk about time horizon, who you are, who the money is for. You might be in your 60s or 70s, yet the money we're talking about is for children or grandchildren that might be out 15, 20, or 25 years. And so it should take on a different risk profile than if it were for you at that stage in your life. That being said, you should also be aware of the score, the risk score of not only the portfolio, but the individual names within the portfolio. Because every stock, every ETF has its own risk score from 1 to 99. Anything above 71 is further out of is beyond the S&P in terms of risk, right? It gets riskier than the S&P 500. Anything less than 71 becomes more conservative. So you just need to understand how the different names of the portfolio interact to give you an overall score.
And also something key here, some older investors might need cash flow. And so that comes into dividend needs, cash needs, and that's something to start thinking about for the first quarter.
Yeah, of course, it should be something that you're always thinking about, again, depending on who you are and where you are in the life cycle, right? Right now, you might be 60, but fully employed, you're not looking for dividend income. You're not looking for the portfolio to generate income you're going to take. So you want to have it reinvested. If you have a portfolio generating a lot of income, you just want to reinvest it. If it's income you need or want, then you should figure out, what it's going to spin off. You can expect to spend 4% of your portfolio and never run out of money. So $1 million portfolio would you take out $40,000 a year. So you'd want to get dividends that would pay about $40,000 a year, and then that could go on forever, and you'd never run out of money.
Sounds like a good prospect to me. Kenny, I love breaking down tickers with you, and we can do so in line with some of the biggest themes this year. And we've done this in some other segments here. So I want to hit some tickers that we haven't. And this is Apple. This is year to date. And what I want to point out here is Apple was really late to the party off of those April 8th lows. Finally got started around July, August, and it's been off to the races now, hitting record highs.
Right. It's taken off, right? It broke out. Not only did it break out of the April lows, but then it broke out of back in March, right? We busted up and through that. And now it's part of that AI story, right? We're hearing Apple come out. Not only is the end of the year, they've got new products, and Christmas season's coming, holiday season's coming, and all that stuff. But in addition, there's a whole AI theme going on with Apple. So look at it now. It looks like it's completely broken out and will continue in this uptrend.
Now, let's take a look at another hyperscaler, Amazon, and this chart is really interesting to me. 240, a big level here. It looks like we had a little poke above it, Might have been a false breakout. Nevertheless, we got an interesting trading range we're working with here.
Right. So I think it was a false breakout because look, we traded up, we came right back down. It didn't even stop, right? It didn't even stop to test it to see if support was there. It broke right back through. So I think we are stuck in this trading range that you see, and you could probably expect it's going to try to hit resistance one or two more times before ultimately breaking out if it's going to break out. I think it is in the new year, but I think it's going to take us some time to do it.
And so you'd wait until the breakout?
I would wait until the breakout. Now, if you already own it, like I already own it, so I'm just not going to do anything with it, right? I'm going to sit and watch it. But if I see it start to break out, then it may change my mind, cause me to jump in and buy some more.
All right, we're going to stick with the hyperscalers. Microsoft, and this is another one. It was off to the races in April, but it has fallen off its peak now with NVIDIA.
Right, so I think this is just a little bit of gotten dragged into the story that maybe is a bit stretched in terms of its valuation. Certainly the fundamental story for Microsoft has not changed, but I do think this whole recent story about the whole AI trade either being in a bubble or being stretched is just taking its toll on names like Microsoft and NVIDIA. I don't think it's a reason to panic. Certainly, we're not anywhere near the lows. It's kind of going to consolidate, and here's what it appears to be. But I think you just have to keep your eyes on it. Again, it's a name that I own, so I'm just going to sit and watch and see how it performs.
All right, NVIDIA, we're gonna tackle the OG here. Similar story, similar chart kind of.
Right, exactly, right. So we saw it take it off. It kind of, it got itself challenged up there in November. It's backed off. It's kind of holding right in here. You want to watch it. See that line that you just drew?
Yes.
That you want to watch that and see if it holds that level. If it does and starts to trade up again, I think it's going to remain in that channel. And so you just kind of have to watch it. For me, this would be a hold. Again, we own it. I own it. So I'm just going to continue to watch. If it breaks down below here, then I think you have to watch because then I think there's a potential that even breaks a September low. That would be something you want to keep your eyes on.
All right, let's fast forward to a different sector. This is going to be the banking sector. Finance, here's Bank of America, hitting record highs recently to little fanfare.
Right, well, hitting record highs along, if you look at a couple of the other names, you look at the XLF, the financial ETF, it is also breaking out. Bank of America is another one of those names that I own. I like it. I love the fact that, it's broken out here. Not with a lot of fanfare, but I like the way it is acting. And it clearly feels to me like it's in this uptrend. It is certainly within the rails that he just drew.
Yeah, and very similar name here, JP Morgan.
Same thing.
Now, yeah, it's kind of broken the uptrend, but doesn't look like anything critical. It's just kind of consolidating here near the highs.
Right. So what it did was it broke that uptrend, but you see it came right down to that level again that you drew, and now it's bounced off of that. So I think it's going to remain in this trading range. You're going to want to see whether it breaks up or breaks down based on its next move, right? Whether it's able to pierce up and through the November high there, or whether it's going to back off and come to the November low.
All right, here's another ticker I got from you. I want you to tell me your reasoning on Verizon. Is it for the dividend? What do you like about Verizon?
For me, it's just all about stability and dividend in Verizon. It trades at a very tight range. It pays about a 6 3/4% dividend. It's kind of it's a big mega cap name. It's very stable. It doesn't, it's not up 150% or down 20% in any one year. It kind of stays stable. But for me, it's all about the stability of the dividend, which I just take and reinvest.
Yeah, very good. We have a little bit of time for the quantum trade here. So IonQ, and this is a multi-year chart here. This goes back, I believe, to their IPO. Let me just dial up the year to date. And there we go. Bounce kind of came back to break even. It's very volatile, but
it's a very volatile name. It's in the quantum space. And so quantum, I think, is going to be a big theme going into 2026. It's already a theme now in late 25, but I think as we continue to get on that AI narrative and that AI trade, you're going to see specific quantum names. And IonQ is a name to watch, right? Again, you see how volatile it is. At one point, even just a month ago, it was up about, what was it up about? I think it was up about 40%. It's now almost flat on the year, but you see it came right back down and bounced, which is a positive sign, right? It could have easily broken and traded back to the March lows. It did not. So I want to keep my eyes on that. Again, it's a name that I own, but if it breaks below this line, then I'm going to look to add.
Another quantum trade, surprisingly, we only got 30 seconds. IBM.
I love
Big Blue. Let's do it.
Right. I love IBM. It is a large mega cap name, takes you all the way back to the 1960s. Look,
there you go, the 1960s right here.
It's had its great move. And what a lot of people don't recognize, besides being an also good dividend payer, it's got a lot going on in the quantum space. So if you want quantum exposure with a more stable name, IBM's the way to play it. Coming up, I'll look back at the top trending tickers on Yahoo Finance this year, plus making moves in the options market. We've got 3 trades to watch.
Start playing with real people. Play the official WSOP poker app. WSOP. Respect the game. Play for free now.
Ah, the good old days. Back when the team ran HR through 15 different apps, they spent half their time getting them to talk to each other, and the other half squeezing me. But then suddenly the whole team got on the ball, and that ball was not me, my friends. And it still hurts.
When your business needs an HR platform that's truly all-in-one, that's Bambooable. That's Bamboo HR.
This holiday season, Candy Crush Saga is your ticket to the sweetest ride. Tackle 20,000 fun levels with good Wi-Fi needed so you can play anytime, anywhere. Candy Crush Saga. Download now and play for free.
Join the biggest community of bingo lovers. Bingo! I love the animations. I love the color. Getting to meet so many different people from different parts of the world. I love seasonal fruits, especially taking pictures. This is the community. Going to different islands and getting across the bridge when you're done. And you just like over. I've made friends everywhere. Tons of friends. New people that I meet. Forming friendships. Real people playing bingo.
Okay, we're back.
Advanced engineering, and now redefining the way we prepare food at home. The titanium edge is prized for its strength, purity, and resilience. Resists corrosion, never absorbs and remains flawlessly.
All right. Oracle at the highs. Palantir is pretty flat. All right. Okay. It's a good thing I went when I did. Oh, boy. All right. So we're up here at the highs. S&P 69.33. Making new all-time highs to entice some people to chase up here. Okay, let's take a look at the sectors and see how sectors are doing. Okay, materials, XLB. That looks good. Materials. So what's Freeport doing? Freeport McMoran, FCX, Freeport, higher. Okay. Albemarle, higher. Uranium, UU, flat CRML, critical metals, trying to come off the low. USAR, okay. NEM, Newmont Mining, okay. XLC Communications, that'd be Meta. Meta's doing pretty good today. All right, they're coming out of a consolidation. You can see we've had pretty much the same thing like on the indices. We've had this choppy price action for the past 3 weeks. We're finally breaking out, so perhaps we see new all-time highs. Looks good though, right? XLC looks good, so that would be Meta, Google, Meta. Trying to clear the 200-day would be a good thing. We see tight Bollinger Bands on Meta, so I would imagine Meta is going to be something we look at next week and into the first couple of weeks of the new year. Meta, Google, same thing. Google improving this week, stalling at the 20-day. Fox, Warner Brothers, all of these. Warner Brothers Discoveries, Paramount, Skydance at the lows, and Netflix. Both of these battling for the rights to acquire Warner Brothers. Communications. All right, Apple's looking good. Apple rising. All right, I sold some Apple this morning that I bought yesterday. That turned out okay. Just reducing my exposure, nothing major there. I don't have anything on my mind other than I just wanted to reduce my exposure. Had a lot of calls that we bought yesterday. All right, so XLE Energy back above the 50-day, kind of a sideways range-bound pattern. Let's look at the weekly real quick. Energy, yeah, range-bound. XLF Financials doing well. Financials breaking out to new highs. JP Morgan, Morgan Stanley, Goldman Sachs, all of these look good. Morgan Stanley, Goldman Sachs, PNC Bank, Citigroup doing really well. Bank of America, best price action I've seen in Bank of America since 22. Since 22, we had that pullback into 23. 23, we turned back up. Pretty similar leg higher to what we're seeing right now. We dipped in April and then started the second leg up. Bank of America looking really good. I wouldn't buy it up here, but I'd wait for a little dip. So that's financials. KRE. Regionals look okay. What about Ozark, OZK, HBAN? Okay, those look good. State Street Bank, highs. Okay, these all look pretty good. USB, US Bank, Corp, higher. Okay, so that's the financials. Industrials, looking good. So no surprise that we're making new all-time highs on the S&P. Futures are pulling back, but no surprise we made a new all-time high. XLK, healthcare, tech bouncing off the highs of the set. This could be something that helps us next week. Tech, consumer staples bouncing at the 50-day, defensive, XLV. Healthcare tends to outperform in the midterms. Second year of an administration, healthcare tends to work well. So that's something to think about. Eli Lilly, the pharmaceuticals, J&J. These are taking a break at the moment. J&J back up. Bristol Myers, BMY. Okay. HMY. Harmony Gold. HRMY. Harmony Biosciences. I always get those two symbols mixed up. IBB, Biotechs. These are doing well. XBI, IBB. Interesting. Let me just look at IBB here. Have a thought about IBB. Banks, aerospace builders. I think I have farmers on here. Okay. Lilly, J&J is getting a little expensive on the call side. J&J. What about IBB? I add IBB to this. IBB. No, still fairly inexpensive. IBB and XBI. XBI. XBI is still pretty cheap too. XBI is still pretty cheap. Buy call spreads on XBI. Maybe do that. Yeah, maybe do that. XBI for next year. XBI coming out of a Bollinger Bands. You know what? I'm going to do that. I'm going to buy some XBI while I'm thinking about it. XBI. Or do I want to wait until next week? You know what? I'll wait until Friday. XBI, remind me. I want to buy some XBI because there's only 10 minutes left in this trading day. You got Theta over tomorrow into Friday, and then you got the weekend. So I'll look at it next week on Saturday. NVIDIA starting to push. Who was it? Tony SMU. Tony mentioned NVIDIA before. Tony, good call. NVIDIA, good call. Tony SMU. Merry Christmas to all of you guys and ladies. Hope everyone has a great holiday if you celebrate.
So it is a great opportunity to be able to hedge yourself, whether it's with S&P options, that trade right here, or the VIX that trades next to me. It is a great way to hedge yourself and still remain exposed to the marketplace.
Are you serious? You going to Antarctica? Wow, that's impressive. Okay, Apple pulling back. Apple pulling back. Apple profit taking. NVIDIA's pushing. NVIDIA looking good. Okay, let me see what I want to do with NVIDIA. NVIDIA bought calls last week. NVIDIA, okay, that looks good. Okay, NVIDIA got 190s. Got 190 calls, NVIDIA.
And then I can sell calls against that. This allows me to have a really nice upside and use the
Adobe. All right. So we left off with healthcare, consumer discretionary. It's okay. XLU's coming off the lows. All right. So most sectors are getting bullish action, whether they're at highs, just short of highs, above the 50-day. Everything looks pretty good. I'm very happy with that. So I came into the day thinking, let me just reduce exposure. All right, what's Disney doing? Disney, 116 is the target on Disney. Disney finishing up pretty strong. I just reduced my exposure in Disney. I had 20 calls on Disney. I just dropped it down to 10. Disney, looking for 116 by Friday, maybe Friday. So just reducing exposure. Whenever I'm up a lot, I start thinking about, okay, my trading account, it's not my retirement accounts, IRAs, 401ks, but my trading accounts, if I'm up big on positions, I'll take positions off, even though I got plenty of time into January. If we get any kind of dip on Friday, I'll probably get back into some of these calls that I just sold. Okay, spreads, Adobe, I have an Adobe Iron Condor. That's just sitting here. I'm looking at that $1,300. I want to collect as much of this as possible, keep as much as possible to be technically correct. I sold $1,300 in Condor credits, and I want to get at least 75%. I think we could do that. You can see the Bollinger Bands are coming together. So that was one of the reasons why I sold it, is because Bollinger Bands were expanding 2 weeks ago, and now we're starting to turn in. So this is exactly what I was looking for on Adobe after earnings. That big bullish candle there, that was earnings. Okay, so that's that. Microsoft is good. Microsoft. All right, if you're leaving early, have a great weekend. If you're not coming back on Friday. Okay, Lockheed Martin off the highs. Lockheed LMT. Okay. Probably a lot of people like me doing exactly the same thing, taking profits off. So this is a bullish pattern. It's off the highs of the day. I'll hold on to this until next week, unless I can get a fill at $2.55. I don't see that. Palantir, flat. Palantir, flat. Adobe looks good. QCLS, I had shares in QCLS. I finally took that off. It finally bounced and gave me an exit. So I took the exit. Been sitting on a losing position there. Finally moving back up. That's QCLS. QCLS. What do we got time? I got 5 minutes to go. 5 minutes to go. QCLS. Finally got back up this week. I bought it last week and it pulled back a little bit. Now we're back to a profit. Took that off earlier this morning. Into strength. Okay, this morning up here, bought that, sold that into strength. QCLS. Medical supplies. That's the one, what's his name? The guy who got criminally charged for, I guess, some fraudulent activity in biotechs, whatever his name was. Starts with an S. I forget his name. Mr. Hood usually figures that one out. Okay. All right, so I've taken enough exposure off. Banked a lot of profits. Reduced my exposure just in case there's any kind of shenanigans into Friday morning. S&P 500, congratulations. That was a great trade. If you took the 6920s. Okay, wow. That just dropped off, didn't it? Okay, wow. Beautiful, beautiful. So hopefully everyone had a good day and an even better week so far. We're going to close here in 3 minutes. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. Happy Christmas Eve. Happy Wednesday. Really enjoy being here with you, as always, giving you the play-by-play. Sometimes I'm on, sometimes I'm off. Depends on my mood. The older you get, the more moody you get, it seems like. That's not music. I remember my dad screaming at me sometimes when I was listening to Ozzy Osbourne. That's not music. And then the big hair days in the 80s. He'd just shake his head at me. He was in a big band. He's into the big bands. Anyway, I'm just kind of rambling right now. Looking forward to the holiday. Hope you are as well. Enjoy your time off. Be safe. As Frano likes to say, be safe. Happy holidays, folks. TCP traders, you are the best. All right. We've got 1 minute, 10 seconds to go. 1 minute, 10 seconds to go. Markets are closing at 1 p.m. I don't have any open positions, do I? I don't think I do. 0 day anyway. S&P. Let me just check real quick. I got about 50 seconds to go. S&P. Silver. I got puts on silver. Good day on. Okay. Took the rest of the call credit. Took the remaining call flies off. Made 275% on those. Puts. Okay. All right. So it looks good. Got about 10 seconds to go. 10 seconds to go. Have a good one. Enjoy. We'll see you on Friday. Did I miss the? Oh, the closing bell isn't going to be. We're not going to have the closing bell because that triggers at 4 o'clock. All right, folks. Have a great holiday. Take care. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. Wednesday, December 24th, Christmas Eve. It's been a fun day. Take care. We'll see you on Friday. Ciao.